Good evening, students. Welcome to the session. So, students, today what we are going to do is we are going to finish the international tax portion. So, till yesterday, if you remember, we have done what is the basically source rule for different kind of income. So, if you see now, we have completed in detail the different accrual principles for different kind of income, right? So if you see for the business connection, we have spoken about the business profits deriving in India, right? To the business connection getting established. Then for the capital asset situated in India. Then we had seen for the FTS, royalty, interest, where the payer is government, resident, except where the payer has a business outside India, or non-resident if he has the business in India, right? Then we had seen for dividend paid by Indian company outside India. Then we saw for salaries for the services rendered in India. Salaries rendered outside, salary for services rendered outside India if paid by government to Indian citizen, that will be deemed to accrue or arise in India. Right? So we have done different principles of the source code. Now today what we are going to do is we are going to look at the taxation. So see, we have already done some amount of taxation that was covered under 115A, that we have been doing it. Now what we are going to do is we are going to talk about different provisions, different computational provisions which are specifically applicable for the non-resident. So before we proceed further, in case you have doubts till yesterday, please ask me any questions that you have till now so that I can clarify and then we can proceed forward. So if you have any questions, please let me know. Yes. Okay. So if there are no questions, first we are going to start with the question concerning, we are going to solve one question concerning whatever we have done so far, so that you know now the source rule, and then only we will move forward with respect to the other provisions. Okay. So let me share the module, the question from your module itself. We are going to solve that question. Okay. Compute the total income in the hands of individual aged 55 years being RNOR, RNOR, and NR if he has shifted out of the default tax regime and pays the tax under normal provisions of the Act. So we have to do for all the three. So you're going to give me the answer. Interest on UK development bonds. 50% of interest is received in India. First about ROR, whether this will be taxable in India. In the case of ROR, yes, because the global income is taxable, right? In the case of RNOR, whether this will be taxable. In the case of RNOR, interest on UK development bonds. So the bonds are outside India. 50% of the interest is received in India. So only 50% will be taxable for RNOR. And the same will be even for NR. Right? Good evening, Ginny. So 50% only will be taxable in India since it is received in India. For RNOR and for NR, whatever income is getting accruing or arising outside India will not be taxable. Are we clear? Okay. Next one. Income from business in Chennai. 50% is received in India. For ROR, very simple. Yes, Prashant. So for Prashant, in the earlier case for RNOR, only 50% will be taxable because this was accruing outside India. For RNOR also, only the income which is accruing or arising or deemed to accrue or arise in India is taxable, except if it is from the business or profession controlled in India. In this case for ROR, RNOR and NR, how much will be taxable? This is a very simple one. Yes. Yes, please, students. Yes. Faster. It will be taxable, right? Because the ROR, RNOR or NR, this is the income which is accruing or arising in India. This is income from business in Chennai, right? So for all, this will be taxable. Next is short-term capital gains on sale of shares of an Indian company received in London. For ROR, this will be taxable. ROR, we don't have to think much about because the global income is taxable for ROR, right? What about for RNOR? Yes. What about for RNOR? For RNOR also, this will be taxable because this is the income accruing or arising in India, even if it is received outside India. Still, if it is getting accrue or arise in India, therefore this will be taxable in India. Fine. Dividend from British company received in London. Again, for ROR, this will be taxable. For RNOR and NR, this will not be taxable, right? Next one. Because this is received outside India. Long-term capital gain on sale of plant at Germany, 50% of profits are received in India. Yes. Screen is not visible, Ginny. Can everybody else see my screen?
ब्लैंक मैम ब्लैक स्क्रीन आ रही है
ब्लैंक आ रही है किसी को अब आ रही है
यस मैम
ओके long-term capital gain on sale of plant at Germany 50% of profits are received in India. What will happen in this case? So this will be entirely taxable for ROR. For RNOR and NR, only 50% taxable because only 50% is received in India. Rest is accruing or arising and received outside India. Right? Income earned from business in Germany, which is controlled from Delhi, 40,000 is received in India. For ROR, 70,000 entirely taxable. What will be the taxability for RNOR? Yes. Prashant, received in India is only 50% in the last case. So only 50%, 20,000 will be taxable for RNOR and NR, not entire 40,000. Fine. In this case, what will happen for RNOR? Madhvendra's Zoom link, you're not getting. अजीत जी
या मैम
एक स्टूडेंट को जूम लिंक नहीं है वहां पे बोल रहे हैं
मैम मैं आपको चेक कर दे रहा हूँ आप प्लीज अपने उस पर राइट कर देंगे
कहाँ राइट क्या कर दूं उस पे राइट
मैं आपको चेक कर दे रहा हूँ जूम लिंक ठीक है
हाँ
और आपने अपने जो स्क्रीन है ना उस पर राइट कर दीजिए प्लीज
ओके ठीक है
ओके
Yes, students, please give me fast answer. We have to complete this chapter. What will happen? Income earned from businesses in Germany, which is controlled from Delhi. For RNOR, this will be taxable entirely in India. Not 40,000, but entire 70,000. Why, students? Because this particular 70,000 is from the business controlled in India. So even if this income is accruing or arising outside India, for RNOR, if the income accruing or arising outside India is from the business control or profession set up in India, that will be deemed to accrue or arise in India. Are we clear? So for RNOR, entire 70. What about the NR? What about NR? For NR, only the income which is received in India will be taxable. So for NR, only 40,000 will be taxable, not entire 70. Because that clause is not there for the NR. Yes, Ginny, good. Profits from a business in Delhi but managed entirely from London, 15,000. What will happen for ROR? For ROR, it will still be taxable because global income is taxable. For RNOR also, this will be still taxable because this is the income accruing or arising in India. Even if it is managed from outside India, but it's the income accruing or arising in India. So that becomes the Indian income. So for RNOR, NR, for all the three categories, this will be taxable. Income from house property in London deposited in an Indian bank at London brought to India, 50,000. What will happen in this case? Yes. अजीत जी लिंक नहीं आया मुझे.
नंबर दे रहा हूँ मैं आपको. जस्ट
हाँ चला दीजिए.
आप चला दीजिए. हाँ अशोक जी.
मैं स्क्रीन शेयरिंग स्टॉप करती हूँ. So if somebody is unable to join through Zoom link, this is the Zoom ID which is there. Please look into it and please join. You can note down the Zoom ID. Yeah. Meantime, tell me income from house property in London deposited in an Indian bank at London. Yes.
सॉरी मैम, इसको थोड़ा सा जूम कर दीजिए.
Yeah. Income from house property in London deposited in Indian bank at London. Not taxable for RNOR and NR for the rental income received outside India, Prashant. So yes, this is deposited in London, right? So this is basically accruing or arising outside India, right? So for RNOR and NR, this income is not accruing or arising in India, even though it is deposited with the the London branch of an Indian bank, right? So it is not an Indian bank, but it is not deposited in the Indian bank account. So therefore, it is not received in India. It is deposited with a branch of the Indian bank in London. So this is not received in India also. And therefore, for ROR, it will be taxable. For RNOR and NR, it will not be taxable, even if it is remitted to India, because remittances are just sending or repatriating your money back. The accrual, the first receipt has already been done outside India. Are we clear? Okay. So now let's move forward towards it. Next one is the income interest on the debentures in an Indian company received in London. Again, this is basically debentures in Indian company. So therefore, this is income accruing or arising in India. So for ROR, RNOR and NR, this will be taxable. Are we clear? Yes, Jimmy. Fees for technical services rendered in India but received in London. Again, the same thing. If it is rendered in India, this will be income accruing or arising in India. So it will be taxable for all the three categories. Profits from a business in Bombay managed from London. Again, the same thing. This is, even though managed from London, doesn't matter because this is the income accruing or arising in India. So taxable for all the three of them. Pension for services rendered in India but received in London. So this 4,000 again is the Indian income for all the three. It is income accruing or arising in India and therefore will be taxable in India. Right? Income from property situated in Pakistan, received also in Pakistan. So this will be only taxable for ROR. This will not be taxable for NR and RNOR. Right? Because this is in Pakistan. Right? Past foreign untaxed income brought to India during the previous year. What will happen for ROR? Yes. What will happen for ROR? See, past foreign untaxed income. No, Ankit, it will not be taxable. See, when I was a non-resident, this was the income that I may have earned, right? So therefore, now when it is brought back to India, and now I am ROR. See, one you will have to assume for, in this case, for the ROR, you have to make an assumption that this income was earned when the ROR was a non-resident in India. You have to make that assumption. So you have to make that assumption that this ROR was a non-resident when this income was earned. Now, once he has become a resident, the past income which he had earned at that time cannot be now taxed when he's bringing back the money to India. Because this is just a remittance to India. And as I said, remittances are not taxable. These are just, you are bringing back the money. Even if it was untaxed then, let it be. From Indian perspective, India also does not have any right to tax the past income. Because at that time, the person was non-resident. It would have been a different situation if that person was a resident at that time and he never disclosed this income in India. So if you assume that this person has not disclosed this income, even though he was a resident, then in that case, you will tax it. But if he has earned it while he was a non-resident, so this will not be taxable anymore. And any which ways for RNOR and NR also, this will not be taxable anymore. Are we clear, students? Income from agricultural land in Nepal received there and then brought to India. So income from agricultural land in Nepal for ROR will be taxable because agricultural land is not in India. So therefore, there is no exemption under section 10. Agricultural land is in Nepal. You get the exemption only when the land is in India. For RNOR and for NR, this will not be taxable because it's just the remittance which is made to India. Income from profession in Kenya, which was set up in India, received there but spent in India. Now, this 5,000 will be taxable for ROR, will also be taxable for RNOR because the profession was set up in India. Right? So, income which is accruing or arising outside India from a business controlled or profession set up in India. Even if it is received outside India, it will still be taxable for RNOR. For NR, it will not be taxable. Gift received on the occasion of his wedding. This is not taxable. If you see under 56(2)(10), there is an exemption on the gifts received on the wedding. So whether it is ROR, RNOR or NR, this will not be taxable, students. Fine. Interest on saving bank deposit in the State Bank of India. This will be taxable for all the three, but you will get the deduction under 80 TTA up to 10,000, right? So you will get a deduction under 80 TTA. Income from business in Russia controlled from Russia for ROR, this will be taxable. For RNOR and NR, this is not taxable. Then dividend from RPL and Indian company for all the three, this will again be taxable. Agricultural income from a land in Rajasthan, this will be exempt for all the three because agricultural income is exempt. Are we clear about this? Any questions, students? Any doubt? Yes. Any questions? Any doubts? Is this clear? Is this question clear to all of you? Yes? Okay, perfect. So let's proceed further. Now there is one more section that we are going to talk about before we move into the computational segment. So this is section 9A of the Income Tax Act. Okay, what is 9A of the Income Tax Act? See, if you remember, I told you that in respect of the business which is carried out in India, right? The business income will be taxable in what case? When you have a business connection in India. Yes or no? Now, business connection, the constitution of the business connection which is there. How does it constitute? What is the business connection? As I told you, it is not a defined concept, right? So business connection means that there has to be the linkage between the activities that a non-resident is carrying out in India and the income which is getting generated therefrom. Now, section 9A is talking about the fund managers. So there are a lot of these fund managers which are managing the big fund houses. What are these fund houses? So basically, these are the companies which are investing in the Indian market, in the Indian companies, right? And they are being managed by the eligible fund manager in India. So they have a lot of conditions with respect to the fund manager being situated in India. So what they have said in the section 9A is, they are saying that the fund management activity, which is carried out through an eligible fund manager, will not constitute the business connection, because there was an apprehension that in case, the eligible fund manager is considered as a dependent agent of a non-resident, in that particular case, what will happen is the eligible fund manager can result in the business connection for the non-resident, and all the incomes will be taxable in India. So therefore, they have introduced this clarification to say that in the case of the eligible investment fund, the fund management activity which is carried out by the eligible fund manager, which is acting on behalf of the fund, will not result in constitution of the business connection in India. Are we clear? Now, what is the eligible fund manager? Who is the eligible fund manager? What is the eligible fund? All that we are going to have a look. But for now, what did I say? That this will not result in the constitution of the business connection. So this is basically exclusion which has been given. Are we clear? This has been an exclusion which has been given. Now, understand one thing. What are the criteria? You don't need to remember exactly all those criteria. So you have to just remember here that this is what is the exclusion which has been provided for. You don't need to recollect all the criteria which are there, but we'll just quickly go through. So the eligible investment fund means a fund which is registered or incorporated outside India. So basically, the fund is a non-resident. It should be a resident of country with which India has a DTL. The aggregate participation or investment in the fund, directly or indirectly by the persons who are resident in India, should be less than 5% of the corpus of the fund. So you don't need to remember all these conditions, but I'm just giving you an idea. So basically what they are saying is that this fund should not be controlled by an Indian person, because then it becomes a case of round tripping. What is round tripping? That the Indian person is instead of putting his funds directly in the Indian stock market, he is establishing the fund overseas in some other foreign jurisdiction, and then again sending the money back to India for investment in the Indian market. That is round tripping, that the fund is going, that the investment is going out and then again coming back to India. So that's why they have given a restriction that the Indian residents should not own more than 5% of the corpus of the fund. Are we clear? The fund and its activities should be subject to the applicable investor protection regulations in that country. The fund should have a minimum of 25 members. Any member of the fund shall not have any interest in the fund exceeding 10%. The aggregate participation interest of 10 or less members shall be less than 50%, and the investment in the fund shall not exceed 20% of the corpus of the fund. So investment of the fund in any entity. So basically the fund should not invest more than 20% of the corpus in any entity. No investment shall be made by the fund in its associate entity, and the monthly average corpus of the fund shall not be less than rupees 100 crores. So there are these different conditions which are given. The fund shall not carry on or control and manage directly or indirectly any business in India. And the fund also should not be engaged in any activity which constitutes a business connection, nor should have any person acting on its behalf whose activities constitute the business connection. And the remuneration which is paid by the fund to the fund manager in respect of the fund management activity shall not be less than the amount which will be prescribed. So basically what they are trying to say that if it's an eligible fund, if it is qualifying all these activities, then in that particular case, it will be considered as an eligible fund to be considered under the exclusion of section 9A. Are we clear? Then they have given who is the eligible fund manager. The person should not be an employee of eligible investment fund. The person should be registered as the investment advisor or as the fund manager, right? So all the asset management companies which are approved by SEBI will be considered as engaged in the activity of fund management. The person should be acting in the ordinary course of his business, and the person along with his connected person shall not be entitled to more than 20% of the profits of the eligible fund from the transactions it is undertaking for the fund. So if he satisfies these conditions, he will be considered as eligible fund manager. So basically, he should be engaged in the fund management activity, which is he should be registered with SEBI. He should not be employee. He should be acting in the ordinary course of business, as in he should be independent and should not be entitled to more than 20% of the profits of the fund. If that be the case, he will be considered as an eligible fund manager in India, and he will not constitute the business connection for the non-resident. Are we clear about this? Yes or no? So it's a very, very simple clause which is there. There is nothing much that you have to remember over here, but it's just that this small point which I wanted to make. Are we clear? Next, what is left out is the exempted income of the non-residents. Now we'll cover here certain exempted income of the non-residents which we have not touched upon as yet. See, yesterday we touched upon the remuneration which is given to the employees of the embassy of the foreign country or the non-resident employee of a foreign company. We have considered those, right? But there are certain more exemptions that you should be remembering. One is interest on the money standing to the credit of individual in his NRE account. What is NRE account, students? Any idea? What is NRO NRE account? Yes. What is NRE NRO account? Have you heard this term before? NRE is basically non-resident external account, and NRO is non-resident ordinary account. So, yes, Ginny. NRE account is basically the NRI ka bank account in India for remittances outside India. So basically, he will bring back the money in India through the NRE account. Right? So whatever interest is getting generated on that NRE account, that will be exempt for a non-resident who is non-resident as per the FEMA rules, not as per the Income Tax Act. Are you getting this? Under the FEMA, the test for non-resident is different. For residency, the test is different under FEMA. So in FEMA, if you are a non-resident, the interest on the NRE account will be exempt. And similarly, there is another account which is the FCNR account. What is FCNR account? Any idea? Foreign currency non-resident account. So this is an account which is maintained in India in foreign currency. Even interest on that is exempt for the non-residents. So this is basically you will have to remember as a part of your exemption. The other exemptions you can choose to not remember because those are very, very specific exemptions which are there. But still, this exemption you should remember because this could be asked as a part of the full-fledged question. Right? Any questions so far? Yes or no? Yes. Okay, is this clear? So let's move forward. So this is a one exemption I wanted you to specifically remember. Rest of it, you can just simply go through. I may not be, going through in detail for that because those are self-explanatory. So you can choose to go through once, but nothing to remember as such. You just need to remember whatever I have said so far are the most important ones that you should be remembering. Fine. Now let's move towards the computation. Presumptive taxation for the non-resident. So let us write down. First is section 44B, which is basically pertaining to computing the profit and gains of shipping business other than the cruise shipping in the case of non-resident. So, section 44B, this is for the shipping business. Now, what does this act, what does the act tries to tell over here? So in order to incentivize certain sectors, they have given the presumptive rate for the certain sectors. For example, shipping, airline, for different sectors, they have given the different rates, right? So now for the shipping business, which is there, for that they have given under 44B. What they have said it for the shipping business is that the presumptive rate shall be 7.5%. What they are trying to say over here is that 7.5%. So the presumptive income, like you have under 44 ADA, right? Similarly here, they are saying that the profit and gains of a non-resident who is engaged in the operation of these ships would be 7.5% of the following amounts. Amount paid or payable, whether in or out of India, to the assessee or to any person on his behalf on account of carriage of passengers, livestock, mail or goods shipped at any port in India. Right? So any amount which is getting paid or which is getting accrued for the shipment which is coming to India. And 7.5% of the amount received or deemed to be received in India by the assessee on account of the carriage of passengers, mail, livestock or goods shipped at any port outside India. So for shipment going outside India, the amount received in India. For the shipment coming to India, any amount received, paid or payable. Are we getting this? So there is 7.5% which is given. So you have to just write it over here. Presumptive rate of 7.5% of amount paid or payable, amount paid or payable, whether in or out of India. whether in or out of India, on account of the carriage of goods, on account of mail, livestock, passengers to any port in India, right? Plus B is amount received or deemed to be received, amount received or deemed to be received in India on account of carriage of goods or mail or livestock or passengers to, from, to any port outside India. Yeah. So, to any port outside India. Or you can write at any port outside India. Are we clear? So this is a presumptive rate which is given for the shipping business. Right? Now, if you recollect, students, there was also a tonnage tax scheme which was applicable, which we had discussed in the assessment of various entities class. Why that is not applicable to them? Do you recollect the tonnage tax scheme by any chance? Yes. What was tonnage tax scheme? Yes, 20% needs to be transferred to special reserve, and then we had different rates for that, slabs for that, with respect to what is the tonnage which is there in the ship. So, to whom that is applicable? Yes. Yes, right. That is right, Ankit. So, to whom that is applicable?
जो मैम इंडिया के पोर्ट से सामान लोड करके दूसरे पोर्ट पे छोड़ के आ रहे हैं.
Okay, but even this ship is doing like that, right? So then why is it not applicable over here?
मैम ये ट्रांसपोर्टिंग का काम नहीं होगा, ये शिपिंग मैन्युफैक्चरिंग का हो सकता है.
नहीं, ये भी ऑपरेशन ऑफ शिप्स का ही है, बट टनेज टैक्स स्कीम वाज एप्लीकेबल टू इंडियन रेसिडेंट कंपनी. The tonnage tax scheme was applicable to the Indian resident companies, Indian shipping company plus the foreign company having the poem in India. Isn't it? So tonnage tax scheme was applicable to the Indian resident company. Are we clear? This is applicable to a non-resident companies. So that is the reason why your tonnage tax scheme will not be applicable. So just write down for your information so that when you are revising, you should not get confused. Tonnage scheme is applicable for the Indian resident company. A foreign company, if it has OM in India, it will or it can opt for tonnage scheme. Are we clear? Yes or no? Fine. Now there is another section
Ma'am?
over here. Yes.
तो मैम ये कह सकते हैं कि शिपिंग बिजनेस अगर नॉन रेजिडेंट कर रहा है तो उस पे एप्लीकेबल है
टनेज की ये 7.5
शिपिंग बिजनेस वाली जो 44A(b) वाली प्रिजम्पटिव टैक्सेशन
हाँ
है वो नॉन रेजिडेंट शिपिंग बिजनेस कर रहा है तो उस पे एप्लीकेबल है
yes. So basically they are engaged in the carrying out of the passengers, livestock, mail or any goods. So if they are into the shipment or passenger ships where they are carrying out the mails, basically like any kind of goods which are there. So those kind of shipments are covered, those kind of ships are covered over here. Tonnage tax also has the same. But under tonnage tax, it is basically covering the Indian ships. Indian company and the foreign company having the OM in India. So basically, tonnage tax scheme is applicable to the Indian resident shipping company, whereas 44B is applicable to a non-resident shipping company. Are we clear? Yes. Now, these amounts would also include the demurrage or handling charges. What are demurrage charges? Any idea? You have done custom law. So, when the goods are at the port, right? So at that time, you are given a specific timeline to load those goods or to clear those goods from the ship, right? So it is, possible that the ship, when it comes to India or it goes to a different country, the goods are in that ship. Now you have to clear those goods from the port. In case you do not clear the goods from the port, you are charged a demurrage charge. Or sometimes the goods are like that where it is very difficult to handle those goods. So therefore, in that case, the handling charges are also paid. So the 7.5%, whenever it is applied on the amount paid or amount received, it will include, these amounts will include the demurrage charges or the handling charges. Are we getting it? So demurrage charges are basically the charges if you do not clear the ship on time. So in the Japan Lines Limited case, it was held that the amount paid or payable would include the demurrage charges. Are we clear? So just write down over here. Includes demurrage and the handling charges. Now there is one more section which is there, which is section 172, which is also applicable for the shipping companies. Now what is this section 172? So 172 is a section which is a code in itself. It's a complete section which is providing for not only the tax rate, it is not only the presumptive rate, it will provide for the return filing, it will provide for the entire assessment. Everything is provided within that one section. Now, if you have done the basic concept class, under the basic concept class, you would have understood that the income of the previous year is charged or assessed to tax in the next assessment year, right? But there are certain exceptions to that rule. What was the exception if you recollect one? What were the exceptions? Are you able to recollect something? Yes. What is the exception to the income of the previous year will not be charged or taxed to will not be assessed or charged to tax in the next assessment year, meaning the income will be taxed and assessed in the previous year itself. Can anybody recollect? Yes. So if you see, there were certain exclusions where a person is leaving India. Yes, Ginny, very good. Where a person is leaving India forever. In the case of the shipping companies, because shipping company also, yes, Kirti, very good. Shipping companies, when they leave the Indian port, there are doubts that, whether they will pay the taxes in the assessment year. So therefore, the income of this shipping company is charged or assessed to tax in that previous year itself. Yes, Kirti, discontinued business. Yes, very good. So the 172 is basically that exception. So 172 says what? 172 provides a procedure of summary assessment. Summary assessment meaning short and quick assessment. So the master of the ship has to furnish a return of the full amount paid or payable to the owner or the charterer or any person on his behalf on account of the carriage of the passengers, livestock, mail or goods shipped at any port in India. Right? So the master of the return will master of the ship will prepare a return and furnish it to the AO that these are the amounts paid or payable for the shipment that has come to India. And before the ship will depart, the return will be furnished by the master of the ship to the assessing officer. Are we clear? So that will be done. And then based on that return, the assessing officer will determine the tax payable on the income that they have earned. And what is the taxable income over here? It is 7.5% of the amount paid or payable on account of the carriage of passengers, goods, mail which has come to Indian port. And the tax rate which will be there is the rate which is applicable to the foreign company. So all of this will not be done in the assessment year, but will be done in the same previous year itself. And when the tax is paid by the ship, only then the assessing officer or the custom officer there will issue a port clearance certificate. Yes. So the assessing officer will give the or the customs officer will issue the port clearance certificate, which means now the ship can leave the Indian port. Are we getting this? So this is the entire procedure which is given under 170. Now under 172, you may say that the tax rate is same. Sorry, the presumptive rate is same. Answer is yes, but there is a little bit difference. Under the 44B, it is 7.5% of the amount paid or payable with respect to the shipment in India and amount received for the goods shipped at any port outside India. Whereas under 172, it is 7.5% of the amount paid or payable only on account of the carriage of the shipment in the Indian port. That's it. It is not concerning the amount received for the shipment at the port outside India. So that is the difference between 44B and 170. Now, if the assessee want, he can, before the expiry of the assessment year, which is the assessment year concerning the year in which he is earning the income, right? In such a case, he may opt to go as per the normal provision instead of the 172. And the taxes that have been paid under 172 will be considered as advance taxes and will be adjusted against the normal taxes, which will be arrived at by using the provisions of 44B. Are we getting it? So in case the assessee is covered under 172, it will be only 7.5% of the amount paid or payable on account of the carriage of the shipment which is arriving at the Indian port. And the income will get taxed at 35%, which is the rate applicable to the foreign company. But in the next year, the owner can opt for the normal provisions, and in that case, the tax already paid under 172 will be considered as the advance tax. Are we clear? Yes or no? Any questions? Any doubt? Yes? Fine. So just write down over here. Just write down. Sorry. Yeah. Section 172. Income of the previous year charged to tax in the previous year. Right? So you will just write over here, it will be 7.5% of the amount paid or payable, on account of the carriage to the owner, or you can just write to the assessee, whether that amount is paid in India or outside India. Right? Shall be deemed to accrue or arise in India. Are we clear with this? So basically, this will not include the amount which is getting received on account of the carriage outside India. So 7.5% of the amount paid or payable on account of the carriage of livestock, passenger goods shipped at any port in India. So just write down. You can write like this rather. Of livestock, passengers shipped to any port in India. This shall be deemed to accrue or arise in India. And my tax rate will be the rate applicable to the foreign company, which is 35%. Now, even if I am a non-corporate shipping company, let's say I'm a shipping company which is a partnership firm in US, still I will be subjected to 35% rate. Whereas if I go as per 44B, I will not be subjected to 35%. Right? I will be subjected to a much lesser tax rate because let's say I may be considered as AOP, I may be considered as body of individuals, in which case the rate will be as per the AOP BO. Right? So it is possible that I may be a non-corporate assessee, but still I will be subjected to 35% tax rate under 172. So therefore, the assessee in the assessment here can opt for normal provisions, and in that case taxes paid under section 172 shall be considered as advance tax. Any questions, any doubt with respect to this? Is it clear? Is 44B clear? Here also demurrage and handling charges will be included. Here also demurrage and handling charges will be included under the amount paid or payable. So just write down. Includes demurrage and the handling charges. The return shall be filed by master of the ship before the departure. The assessment shall be made by AO, or you can write the summary assessment. Tax clearance certificate issued by the customs officer. Fine. Are we clear? Okay, so let us solve one situation-based, question or case study on this particular point, so that it becomes clearer for you that how do we actually compute this? How do we compute the entire 44B provision here with respect to the shipping count? Okay, so let me give you the question. Yes. A Limited, a foreign company engaged in the carriage of goods through ship. It operates ship between India and Singapore. It has received the following amounts. Rupees 2 crores in India on account of carriage of passengers from Mumbai. Rupees 1 crore in India on account of carriage of goods from Mumbai. Rupees 3 crore in India on account of carriage of passengers from Singapore. Rupees 1 crore in Singapore on account of carriage of passengers from Mumbai. The total expense by Mr. A was rupees 6. Was not by Mr. A, by A Limited. By A Limited was 6.75 crores. So whether you will include 2 crores first, whether we will consider 2 crores. Yes, right? Because this is the amount paid or payable, which is on account of the carriage of passengers at any port in India. So yes, we will include this, right? We are going to include this particular amount. Rupees 1 crore in India on account of carriage of goods from Mumbai. Again, this will also be included because this is again the shipment at the port in India. 3 crores in India on account of the carriage of passengers from Singapore. Whether this will be included? No? Why, Ankit? No? Yes? Yes or no? It will be included. Yes, please. Kirti, yes, it will be included. Answer is yes. Because this is the amount received in India for the shipment of the goods which was outside India. And what did I say? Under 44B, this will get included. Are we getting this? So we have the amount received or deemed to be received in India on account of carriage of goods at any port outside India. So even this will get included. 1 crore received in Singapore on account of carriage of passengers from Mumbai. What about this? Included. Yes, right? So this will also get included whether received in India or outside India. Any amount which is basically pertaining to the shipment at the Indian port, this will also get included. So you will take the 7.5% of this. Whether the expenditure will be allowed? Whether the expenditure will be allowed? Yes. Only demurrage and handling allowed? No, 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 Ankit. Demurrage and handling charges are to be included in these amounts. So let's say, for example, Ankit, if the question would have told you that out of 1 crore, or the question would have told you that the demurrage charges collected are, let's say, rupees 10 lakhs on account of shipment concerning the carriage of goods from Mumbai. So then this 7.5% would have even been applied on 10 lakh. So this is not the expense. This is the income which will get included. So demurrage charges are income for the shipping company. This is not expense. So here no expenditure is allowed. So this 7.5% is the presumptive rate. Like you have 8%, 6%, 50%, right? So there also you don't allow any other expenditure. So here also no expenses are allowed. Are we clear? Any questions? Any doubt? Is this clear to all of you? Yes or no? Any questions anybody has? Yes. Is this clear? Fine. Okay. So let us proceed further. Now we move towards the next section, which is 44 BBA. Special provision for computing the profit and gains of the business of operation of aircraft. So this is basically for the aircraft. So 44 BBA again is a similar provision as compared to 44B. This provides a flat rate of 5%, which, after which no further expenditure will be allowed. So basically this is giving the 5% on the same amount paid or payable in or out of India to the taxpayer on account of the carriage of passenger, livestock, mail or goods from any place in India, or amount received or deemed to be received in India by or on behalf of the taxpayer on account of carriage of passenger, livestock, mail or goods from any place outside it. Are we clear? So just write down over here. Section 44B. Presumptive rate for the airline companies. This is again very simple. 5% of amount paid or payable, whether in India or outside India, for carriage of livestock, passengers, good. I'm writing the short form over here. From any place in India, plus 5% of amount received or deemed to be received for carriage of livestock, passenger goods from any place outside. Are we clear? Yes, sorry, Ginny. It is 44 double B. You are right. Good. Okay. So this is again a very similar provision what you have with respect to 44B. This is also a very, very similar provision. Fine. So if you look at here as well, there's one question given in your module only. Let us look at it. Mr. Q, a non-resident, operates an aircraft between Singapore and Chennai. He received the following amount. 2 crores in India on account of carriage of passengers from Chennai. This will be included. 1 crore received in India on account of carriage of goods from Chennai. Again, this will be included. 3 crores in India on account of carriage of passengers from Singapore. So this is the amount received in India for the passengers from outside India. So this will also be included. And 1 crore in Singapore on account of passengers from Chennai. So even if the amount is received outside India, but the carriage is from the place in India, so even this will be included. So if you see, the question is exactly same to what we have solved as the last question. That was concerning the ship. This is concerning the airline. Are we clear? Next one is section 44B. 44 double B. Special provision for computing the profit and gains in connection with the business of exploration of mineral oil. Here they have given a presumptive rate of 10%. What is the rate of 10% on the amount paid or payable to any person, whether in or out of India, on account of the provision of the services or facilities or supply of plant and machinery in India, or amount received or deemed to be received in India by or on behalf of the assessee on account of the services or facilities or supply of plant or machinery used or to be used in prospecting or extraction of mineral oil outside India. So this is basically for the entities engaged in the exploration of the mineral oil. So just write down Section 44 double B, presumptive rate for the non-resident engaged in exploration of mineral oil. This is 10% of amount paid or payable, whether in or outside India, right? With respect to the, one second, yeah, provision of services or facilities or supply of plant and machinery in India, plus amount received or deemed to be received on account of provision of services or facilities or supply of plant and machinery for exploration of mineral oil outside India. Okay. Last one. Okay, here you have an option also to claim lower than 10% by maintaining the books of accounts and getting the books of accounts audited. And if you declare as per 10% presumptive, you will not be allowed any set-off of unabsorbed depreciation and the brought forward business loss. So you can write no set-off of UAD and brought forward business loss. Option to claim lower than 10% by maintaining and auditing the books of accounts. Clear? Last one. The special provision for computing the profit and gains of foreign companies engaged in the business of civil construction or in the turnkey power projects. Again, here the presumptive rate is given, which is basically 10% of the amount paid or payable, whether in or outside India, to the assessee on account of the civil construction, erection, testing, commission, which will be deemed to be the profit and gains in India. Here also, you will not get the brought forward losses and unabsorbed depreciation. If you want, you can claim lower than 10% by maintaining the books of accounts and getting them audited. Fine. So next one is presumptive rate for the non-resident engaged in civil construction. So it will be 10% of the amount paid or payable, whether in or out of India, right, on account of civil construction, testing, erection, commissioning, construction. Right? And here you have no brought forward business loss and unabsorbed depreciation. You have option to claim lesser than 10% by maintaining and auditing the books of accounts. Now, a new section is also introduced for the cruise ships. What is this saying? This has been a recent introduction which is given. So it says a non-resident engaged in the business of cruise ships subject to the prescribed condition. What is that? 20% of the amount paid or payable. Okay? Are we clear? Okay, are we clear? Yes or no? Okay, so just write down the presumptive rate for the cruise ships in the case of non-resident. This is 20% of, again, the same amount paid or payable on account of carriage of passengers plus B, the amount received or deemed to be received on account of the carriage of passengers. Are we clear? Yes or no? Any questions, any doubts, students? So this is basically to incentivize the kind of non-resident company which are entering into the cruise business. So, recently there has been an announcement with respect to Disney starting its cruise ships in India. So this is specifically directed towards them. So Disney is going to start the cruise ship in India, and therefore this will be basically proceeding towards them to incentivize them to come to India and do the business. Are we clear? Yes or no? Okay, fine. Any questions, any doubt? Yes. So this is the presumptive provision which is there. Now, next we have the deduction of the head office expenses under 44C. Now, what is this? Yesterday, we discussed about the branch and the head office, whether they are part of the same entity. Answer is yes, right? So yesterday we were discussing about this thing only, right? That the branch is just an extension of the head office in the different country, but it's not a different entity, right? Yesterday we discussed about this. So let's say, for example, there is an HO and there is a branch. Now it is quite possible that both of them, have these kind of interlinked transactions. You have done at CPT, IPCC yesterday, I was also mentioning, right? Now, branch is required to pay certain expenses to the HO, right? So therefore, whether those expenditure will be allowed in India or not, because it's an expense to self only. But we are calculating the profits of the branch as if it's a separate and independent enterprise. Because then only you can arrive at the profits what the branch is making, right? Because the profits are getting generated through the branch. And what is taxable in India? The amount that is taxable in India, in the first lecture also I told you, is the profit which is attributable to the operations carried out in India, right? So therefore, the operations which are carried out in India are through the branch. And only when you consider branch, you will create a fiction. You will understand that branch is a separate legal entity, although in reality it is not. Only then you will be able to calculate the profit. So whether we can allow the deduction of the HO expenses. So what does the law say? The deduction in the respect of the HO expense is restricted to the least of the following. So deduction restricted to lower of the 5% of the adjusted total income. Or in case of loss, 5% of average adjusted total income. Or the expenditure which is in the nature of the HO expenditure actually incurred by the assessee, which is attributable to the business carried out in India. Actual HO expense. So the expense will be given as a deduction. The HO expense will be paid will be given as deduction, but it should be the lower of 5% of the adjusted total income, or in the case of loss, the 5% of the average adjusted total income, or the HO expenditure actually incurred or which is paid in India, right? So actual HO expenditure incurred in India. Right? Now, tell me one thing. What is the adjusted total income? So, total income computed in accordance with the provisions of the Act without considering the allowance under this section, unabsorbed depreciation, expenditure for just the unabsorbed family planning expenditure, the business loss which is brought forward, the speculation losses, the losses under the capital gain, the losses under the specified source, which is basically the specified business loss, and deduction under Chapter 6C. So the adjusted total income is computed. Adjusted total income is my total income without considering the HO expense, the brought forward or unabsorbed depreciation, then all the losses that we have incurred, which is basically nothing but your brought forward business losses, right? So, one second. So, you can just write over here. Family planning expense or capitalized family planning expense. Then you have the business losses brought forward. Which losses? Business loss, capital losses, speculation loss, then loss from the specified source brought forward under 74A3. It is not specified business loss. It is the loss from owning and maintaining race horses. And then finally, deduction under Chapter 6. So without considering all of these losses and the expenditure, the adjusted total income will be computed. Are we clear? So basically, without considering the UAD, unabsorbed depreciation, the family planning expense. I'm not saying the entire family planning expense. It is not saying that you don't consider the entire family planning expense. The expenditure which is the unabsorbed family planning expense. So you allow the family planning expense which are of the capital nature over the period of 5 years, right? 1/5 you allow, right? So what they are trying to say is the balance amount which is unabsorbed. So you can write here the unabsorbed capitalized family planning expense, right? Then brought forward business losses. So loss from business, capital, speculation, and owning and maintaining resource and deduction under Chapter 6. So you will calculate the 5% of that. And in case it is a loss, then you calculate the 5% of the average adjusted total income. Average adjusted meaning you will take the total income of the 3 assessment years. So 3 assessment year immediately preceding the relevant assessment year. And 1/3 of the aggregate amount of the adjusted total income in respect of those previous years is average adjusted total income. So this will be basically the average adjusted total income of 3 past assessment years. And what is the actual HO expenditure? So it will be executive and general admin expenditure incurred by the assessee outside India, including the expenditure in respect of rent, rates, taxes, repairs, insurance of any premises outside India, which is used for their business, salaries which are basically paid to the employee which is employed in or managing the affairs of any office outside India, traveling by any employee which is outside India. So basically the executive and general admin expenses, what they are talking about. Right? So rent, repairs, taxes of business outside India or for business outside India, for basically premises outside India, salary and travel of employees outside India. Are we clear? So is this particular section clear to you, students? Yes? Yes or no? Let us solve one question on this. The net result of the business carried on by the branch of a foreign company in India for the year ended was a loss of 100 lakh. After the charging of head office expense of 200 lakhs. Explain with reasons the income to be declared by the branch in the return for the assessment year 25-26. So in this case, they have claimed a loss, which is of 100 lakhs. Now, we will not consider this as the adjusted total income. See, HO expenses outside India only, na, because you are paying the expenses to the head office basically for the expenses which they have incurred outside India, Ankit. So that is the reason why we are considering those as the HO expenditure. Right? So basically, the executive and general admin expenses which are incurred by the assessee in respect of this branch, which are incurred outside India and then charged to this particular branch. That is the HO expense, right? Otherwise, what is the HO expense? So head office is located outside India. That will be incurring the expenditure for the branch. And you are paying to the head office because they have incurred those expenditure. Right? ब्रांच तो इंडिया में ही एक्सपेंस इंक्लूड करेगा, वो तो इंडिया में ही एक्सपेंस करेगा, उसका तो वैसे भी डिडक्शन मिल रहा है. This is about the actual expenditure which they have done outside India. Is this clear, Ankit? So now, if you see, they have here claimed the losses. Now, losses are after claiming the HO expense. So, the adjusted total income that you will have to compute is by adding back the HO expense. So, 100 lakhs, you will add back 200 lakhs. So, your adjusted total income becomes 100 lakhs. Now, 5% of this adjusted total income, see, it is not a loss. If it would have been adjusted total income would have been loss, then you would have taken the average adjusted total income. So, adjusted total income is the net income plus the amount of deduction of HO expenses already claimed. So you have to add back. Now, out of this 100, you will calculate 5% of 100 lakhs or actual HO expense, which is basically 200 lakh. So 5% is the lower. So that will be allowed as the expenditure. Are we clear? So this is the income to be declared in the rule. Any questions, any doubts, students? Yes or no? Yes? Okay. Any questions, any doubts? Clear, everybody? Shall we take a break of 10 minutes and then we get back? Let's take a break of 10 minutes. we have to discuss the last section from the PGBP perspective. So yesterday in the class, I was talking about the taxability of the royalty and fees for technical services in India. What did we discuss yesterday? What is the tax rate which is applicable? So the tax rate for royalty or FTS, if I said, if the non-resident has no permanent establishment in India, then it will be 20% on gross basis under 115A. If the non-resident has a PE in India, then it will be net basis under 44DA at the rate of tax rate will be 35%, right? So now what we are going to discuss is the 44DA section. See, if the non-resident has no PE in India, if the non-resident is not having any branch, any establishment in India, then the FTS or royalty will be taxable on the gross basis. Gross basis meaning here no expenditure is allowed. Right? Whereas if the non-resident has a permanent establishment in India, meaning some amount of branch or establishment, then students, what happens is, now I told you in the head office expense deduction also, that if you have a branch, that means for the purpose of the calculating the profits attributable to branch. Because under 911, what did I tell you? That only the profits attributable to the operations carried out in India shall be deemed to accrue or arise in India. Right? Now, how do you calculate what is the profit attributable to the operations in India? When you will create a fiction by understanding a branch as a separate enterprise. That is a fiction. We are not saying branch is a separate person. We are creating a fiction only for determining what are the profits chargeable to tax in India. Because only when you create a fiction that branch is a separate and independent from the HO, you will be able to know that, okay, the branch has done so and so activities, and therefore this is the profit that the branch should be offering to tax in India. Yes or no? So that is what 44DA is all about. So 44DA provision which is there, let us discuss about that. It is providing the method of computation by income by way of royalty or FTS. Right? And there has to be an agreement with respect to that made by a non-resident with the Indian company, where the non-resident is carrying out the business through a P or a fixed place here in India, and the royalties are or fees for technical services are connected or effectively connected with that P. Are we getting that? So basically here what we will do is we will allow the taxability on the net basis. So we will allow the expenses to be deducted from the turnover or the gross receipts of the branch. Are we getting? So while computing the income, the following expenses will not be allowed. What expenses? The expenditure which is not wholly and exclusively for the P or the fixed place of service in India. So the expenditure which are not wholly for the branch, that we will not allow as deduction. And the amount paid by the P to the head office or to any of its other offices, other than the reimbursement of actual expense. So here they are saying that the HO expense we will not allow as deduction other than the amount actually reimbursed for the actual expenditure incurred by the branch or by the HO. Other than that, we will not allow them the deduction of the HO expense. So what are the two expenses which will be allowed? The two expenses which will be allowed are, one is with respect to the expenditure which are wholly and exclusively only for the branch. So if the expenditure is not wholly and exclusively for the branch, we will not allow the expenditure. Are we getting this point? So expenditure, which is the HO expenditure again that will not be allowed as the deduction. So this is the section 44DA, wherein you will allow the net basis of taxation only when there is an agreement which is there between the non-resident and the Indian company. Are we clear? Any questions so far? Any doubt with respect to this? Any questions? Any doubt? Yes or no? So just write down over here. Taxation under 44DA. You can write here itself. Where we had yesterday written about the 44DA. So this is the income minus expenditure wholly and exclusively incurred for the P. What are my expenditure not allowed? Number one, the expenditure which are not allowed are the expense not incurred wholly and exclusively for the P, the HO expense other than the reimbursement of actual expense. So, what are the two expenditures which will not be allowed? The expenditure or allowance which is incurred, which is not wholly and exclusively for the P, and the amount paid by P to the HO. Here, there is a mandatory requirement to maintain and get the books of accounts audited. So, in case of an assessee who is required to furnish the TP report, the due date of getting the books of accounts audited will be 1 month prior to the due date of return of income, which will be 31st of October, because the date of return will be 30th September. Right? So in case there are dealings between the HO and the branch, that transaction is subject to transfer pricing that you will learn in the TP class. In case of the other assessees, the due date of return is 31st October and the due date of audit will therefore be 30th September. So here you can just write mandatory maintenance and audit of the books of accounts. Are we clear? Now, tell me one thing, students. Is it the case that, here you have 35% tax rate after the net basis of taxation? Whereas if you do not have a P, you have 20% tax rate, which is the gross basis of taxation, meaning you will not get any expense deduction. Are we getting it? So there is a difference between the two. So if you have a permanent establishment, you have to identify that whether it would be better that if we claim the expense deduction and tax at 40%, or we avoid a P in India and we get taxed at 20% without any expense. So it will be 20% of the gross receipts. Are we getting this point? So that is the difference between the two. Also, in the 115A, there is an exemption from filing the return of income if the TDS is deducted under 115A and the only income is dividend, interest, royalties or FX. So under 115A, you are not required to file the return of income in India. If your TDS is fully deducted as per 115A and you are having only income as dividend, interest, royalty and FX. Clear? So just write that also here. Exemption from filing return of income if TDS deducted at rates under section 115A, and your only income is dividend, interest, royalties, or if now, yesterday, ma'am was asking that how is this 35% coming? So, where is this 35% students coming from? Is it given under the Act? Is it given under 44DA? Did you think about it yesterday that the question was raised? Yes. Where is this 35% coming, students? Is it anywhere written under 44DA? Where is this rate prescribed? Schedule. Yes, very good, Uncle. So this is coming from the schedule to the Finance Act. So under the Finance Act, you have Part 1, Part 2, and Part 3. Right? So under the Part 1, you have the tax rates for the last year. You have under Part 2, the TDS rates, and under Part 3, the tax rates for the current year. So there you will find under the parts to the Finance Act which are there, or the schedules to the Finance Act which are there you will find this 35% tax rate which is applicable to foreign companies. So this is coming through the rate from the Finance Act. Are we getting? This is not under income tax. So if you read section 4 says what? Where any income is charged to tax at the rates specified in the Central Act. That Central Act means the Income Tax Act or the Finance Act. Are we getting this particular point? So this is coming not through the income tax, this is coming through the Finance Act schedules. Are we clear? So under 44DA, you will have the net basis of taxation, but the tax rate will be 30%. Clear? Any questions, any doubts, students? Yes or no? Yes. So all the expenditure which are wholly and exclusively, for example, there is a US company, it has a branch in India. Now, let's say, for example, this branch enters into a contract with the Indian company, right? So let us take an example to understand the implications of 44DA. So let us say, for example, there is a US company. It has a PE in India. Now, through this PE, this Indian company is providing the services of, let's say, technical service to another Indian company. So this will be FTS, this is technical service. For the US company, this will be deemed to accrue or arise in India, right? Because the payer is the Indian company. So under 917, the FTS will be chargeable to tax in India. Now, since there is a PE involved, right? Let's say the FTS was, let's say, rupees 1 crore. Now, for providing the service of 1 crore, these are my gross receipts. Let's say I have paid the employee cost. So salary, let's say rupees 10 lakh. I will get the deduction. Let's say I have purchased some capital asset. So let's say I have a depreciation on those of, let's say, 5 lakh. Let's say now my head office has incurred certain expenditure which is pertaining to, let's say, the which, let's say, maybe, some amount of the admin expenses there. Let's say they have purchased a software for us. Okay. So let's say the software cost which is there, which is paid by HO. So this is the actual expenditure. So this is, let's say, 1 lakh. So this will also be allowed when I'm reimbursing to the HO. But let's say the HO has purchased the software for itself and then it is cross-charging the fees to me. then if that be the case, I will not get the expense reduction. Or let's say there are certain admin expenses just charged by AO for which there is no actual reimbursement. So that will not be allowed. So this is how you will compute under 44D. Clear? Yes or no? Yes or no? All the students, is this clear? So this completes your business or profession with respect to the computation of the non-resident. So under the head business or profession. Are we clear? So we discussed about the presumptive provisions as well as the provisions relating to the head office expense and the branch expense. Now you should get a question in your mind that, ma'am, you told us that 44C, which is there, allows the head office expenditure, whereas the 44DA is disallowing the head office expenditure. So in respect of branch, where the FTS is there, do we have to allow or do we have to disallow the head office expenditure? So are you getting the question? 44C is allowing you the head office expense, whereas 44C is allowing you the head office expense and 44DA is disallowing that. So how is it interlinked with each other? That should be a question that you may be getting. What do you think is the answer of that? Yes? What do you think? Yes. So 44C, which is there, is a specific section which is basically for deduction of the head office expenditure, and it starts with a notwithstanding clause. But it does not override 44DA. So if I show you section 44C, it says notwithstanding anything to the contrary contained in 28 to 43A. It doesn't say 28 to 44DA. It doesn't say like that. It just overrides section 28 to 43A. Are we getting this? And when you read 44DA, this is a special provision for computing the income by way of royalty. Are we getting this particular point? And there is a specific mention that no expenditure will be allowed, if any, paid by the P to the head office other than the actual reimbursement of the expenses. So you have to harmoniously interpret the provision. 44C is for other than the FTS and royalty, and the 44DA one is for royalty and FTS when they have the PE in India. Are we getting this particular point? Okay. Yes or no? Is this clear? Fine. So let us now proceed towards the computation of the capital gain in India for the non-residents. Now, first we are going to discuss about the first proviso to section 48 when read with rule 115A. Now, section 48, if you remember, what was section 48 about? What was section 48, students? Yes? Mode of computation, Jenny. Yes, that's right. So the method of computation or the mode of computation. So we had from the full value of consideration, we would get the deduction for the cost of acquisition, right? Now indexation after the 23rd July has been done away. So that was also the proviso which was there. The first proviso to section 48 is with respect to the benefit of the exchange rate fluctuation. And this is a mandatory provision which is there. So you cannot say, no, I don't want to claim the exchange rate fluctuation benefit and I want to claim indexation. You can't do that. This is a mandatory provision that you have to claim. So first proviso to 48, just write down. Foreign exchange fluctuation benefit. This is a mandatory thing, right? Now this is applicable to a non-resident. So this particular provision of claiming the foreign exchange fluctuation benefit is specifically applicable to a non-resident who invest in the capital asset in India through the foreign exchange. And that is the reason why we are allowing them to claim the foreign exchange fluctuation benefit. So basically, they are trying to use the foreign exchange to purchase the Indian assets. So when they will be selling the capital asset, they will be realizing the amount in INR. So what you will say is that, okay, you have purchased the amount using, let's say, US dollar. Let's say I have purchased the shares of Indian company through the US dollar. But now when I'm selling it, I'm realizing in INR. So you will be calculating my gain in INR. And that gain is not correct because you are also overlooking the fact that there was the conversion of the foreign exchange into Indian rupees for the purchase amount also. You are completely ignoring that, which is not correct because that will not represent my actual gain. So therefore, first proviso to 48 is giving the benefit to the non-resident. And this is applicable in respect of the shares and debentures of the Indian company. So the eligible capital asset here is shares or debentures of Indian company. Now tell me, students, one thing. This is applicable in which cases? So 112A. 112A is what? All of you with me now. What is 112A? What is 112A?
Ma'am, transfer of unit of business trust and shares और डिवेंचर जिनके परचेज और सेल पे हमने एसटीटी पे किया हो.
Correct. Not debentures. Debentures are not covered under 112A. Only
Share and unit of
unit business trust.
हाँ जी.
Right? 112A, whether it gives you the benefit of first proviso, it says the tax rate will be 12.5% without claiming the benefit of first or second proviso. Are we getting it? So this is not going to be applicable in that case. 112. Whether first proviso, can you claim against 112? Yes. whether it gives you that benefit. Let me take you back to the classes. You're not revising very clearly, right? That's the reason why you're forgetting. You have to keep revising. (112A). What did I tell you there? No benefit of first and second proviso to 48. Right? So you are not going to get any benefit of the first and second proviso to section 48 under 112A. Under 112, in case of the shares, whether you get any benefit of the first proviso. So we are talking about the non-resident or the foreign company, right? So unlisted company or shares of private company or unlisted company or listed securities. In case of unlisted also, it says 10%, 12.5% without the first and second proviso to 48. So यहाँ भी applicable नहीं है. In case of listed securities, it says 12.5% without indexation. So in case of, that means only the listed shares or listed debentures, right? This particular provision will be applicable only when you are not paying the STT on the purchase or on the sale. And that's the reason why you are coming under 112 and not 112A. Are you getting this point? So only there it will be applicable. Are you getting this? So you have to link. See, you cannot apply first proviso to 48 in exam. You will create a blunder if you go as per 112A rate or 112. So this is applicable on the listed shares or the, first I'm talking about the listed shares where STT is not paid. Where STT is not paid and it is also not covered by the CG notification which gives the exceptions. If you remember, even if you don't pay STT under 112A, but for example, if you are claiming, if you are covered under the CG notification, which exempts certain transaction from STT, for example, bonus shares, rights share, amalgamation, do you recollect? If that be the case, then you are still covered by 112A. So if you remember, I had told you that in case of 112A, there are certain transactions which are notified by the CG despite the STT is not paid on purchase. On those also, you will still get 112A. So you should not be covered by that notification, meaning it is outside the purview of that notification. It's talking about those shares. Unlisted shares will not be covered by first proviso to 48 because unlisted shares you will tax under 112. 112 says on unlisted shares, I will not give the benefit of first proviso. So therefore, the interpretation which comes with respect to the first proviso to 48 is that it is applicable only on the listed shares where the STT is not paid and it is also not covered by the CG notification. Are we clear? So your tax rate will be under 112, 12.5%. It covers the listed debentures also. Are we clear? And the third, applicable on the listed shares purchased by a non-resident Indian. This we are going to talk about in few minutes. But are you seeing how we are deriving the interpretation? Because if you just read first proviso to 48 in exam, you will use it. But it is not allowed under 112A. It is not allowed under 112 on unlisted shares. Are we clear? Now, what is therefore the first proviso to 48? First proviso to 48 says that you convert your entire sale consideration, your purchase consideration into the foreign exchange, which you have utilized for purchasing the asset. Calculate the gain in foreign exchange and then again reconvert to INR. That is the first proviso to 48. So what it is saying is that you have to convert in the following manner. And for that, the rule 115 gives you the what will be the exchange rate that you will be using. Are we clear? So the sale consideration, the FVC, will be converted using the TTSR and TTBR. So average of TTBR and TTSR as on the date of the transfer of the capital asset. So you will take the average of the TTBR plus TTSR as on the date of transfer. Then the cost of acquisition will be
Excuse me, ma'am.
TTBR. Yes,
Ma'am, I have sent some message in the chat box. Please read it.
sure. Yes, Shini, you can please leave the class, not a problem.
Thank you, ma'am.
Yeah, please watch the recordings.
Yes, ma'am. Yes, ma'am. Definitely.
Okay.
Thank you, ma'am.
So cost of acquisition will be TTBR and TTSR as on the date of purchase. Right? Then expenses on transfer. Again, you will take TTBR plus TTSR average as on the date of transfer. And when you calculate the capital gain, so you will arrive at the capital gain figure in foreign exchange. So you will reconvert using the TTBR rate as on the date of transfer. Then you will not take the average. Are we clear? So TTBR and TTSR is what? Telegraphic transfer buying rate. This is the rate which is adopted by the State Bank of India. Are we clear? Yes or no? Any question, any doubt? So if you see in the module, we have a chart prepared over here. It says where the transfer takes place before 23rd July. On the unlisted securities, it was 10% without the benefit of the first proviso or second proviso. On the listed shares, other than the listed shares covered in 112A, it was 10% without indexation or 20% with indexation. And on the other assets, it is 20% with indexation. Where the transfer takes place after 23rd July, on the unlisted, it is 12.5% without foreign exchange benefit, and other assets, it's directly 12%. Clear? Any questions, any doubt? Yes, students. So should we solve one question on this? Yes or no? Are we clear about this particular point? Will you be able to solve a question? Okay, so let's start. Let me show you the question. Give me a second. Just 1 minute, student. I think my again this app is hanged up. Just give me a second, student. I think there's some system issue again at my end. Yeah. So hopefully I'm able to see the question. So NR purchases the shares of ABC Limited on 1/1/2013 by remitting the US dollar. Okay, so he has purchased this amount, this particular asset by using the US dollar. Cost of acquisition is given to you 5,85,000. Date of sale, question is not visible. 1 second. Is it visible now?
Yes, ma'am. Yes,
Okay.
ma'am.
Yeah. So date of sale is given 1/1/23. Sale price is given 9 lakh. Expenditure on transfer is 6,000. ABC Limited is a listed company, but shares are through an off-market transaction. The transaction does not fall under the exception notified by CBDT. Exchange rates are given. So TTBR, TTSR rates are basically given to you. Now you are required to calculate the gain over here to identify what will be the capital gain over here, right? So this is the question. So first step is you will start by converting your sale consideration, cost of acquisition into the foreign exchange. So sale price is rupees 9 lakh. At what price you will convert? What is the numbers that you will use? Which exchange rate you will use for sale?
On the date of transfer, ma'am.
Correct. On the date of transfer. So we will take the date of transfer is 1/1/23. So we will use the average of 39 plus 41 divided by 2. Right? So that will come to 40. So we will convert this sale consideration 9 lakh into 9 lakh. We will convert it to exchange rate of 39 plus 41 divided by 2. What is the answer coming to? 22,500. Right? This will be 40. So 9 lakh divided by 40, 22,500. Right? What is my cost of acquisition and expenses on transfer? First, we'll consider expense on transfer. At what date you will convert it? Again, same on the date of transfer. So 6,600 divided by 40, how much does it come to? 165. Then cost of acquisition you will convert at what date? Yes.
Date of acquisition.
Date of
Average.
acquisition. This is 1/1/2030. So 38 plus 40 divided by 2. 39. So I will convert 5,85,000, which is by 38 plus 40 divided by 2. So 585,000 divided by 39. How much does it come to? 15,000. So I will reduce the cost of acquisition from the FPC. My FPC was 22,500 minus the cost of acquisition is 15,000 and the expenses on transfer is 165. So what is my capital gain coming to? This is in foreign currency. So again, the step 2 is to reconvert this into the TTBR rate as on the date of transfer. So what is the TTBR rate as on the date of transfer? 39. So this will be 286065. Are we clear? Yes or no? And this will be long-term capital gain as it is a listed share. What will be the tax rate over here? This is prior to 23rd July. So what will be my tax rate?
20%, ma'am.
It will be 20%. Yes. So 20% you will take it. With indexation is there, but you can take 10% without indexation because you are not claiming indexation. So you can take 10% with the foreign exchange fluctuation benefit. Are we clear? Yes or no? So this is how you have to do it. So the step 1 will be to convert all the amounts into the foreign exchange amount. And the step 2 which is there is to reconvert the capital gain into the INR. Are we clear? Is this absolutely clear to all of you as to how do you do it? Yes or no? Now understand, student, one more point. Just write down here. This is your step 1. And this will be your step 2. Clear? Now, one last important point with respect to this particular section. So this is going to be applicable on the every reinvestment which will be made out of this asset. So let's say, for example, I have sold here the shares worth rupees. What is the sale consideration? 9 lakh, right? Now, out of 9 lakh, I'm investing, let's say, 6 lakh rupees in the shares of ICICI Bank. So, if I'm selling the shares which I have purchased using foreign exchange and I'm buying new asset with new shares, out of that money, the first proviso to 48 will be available even on the reinvestment as well. Are you getting it? So let's say, for example, here, if let's say, for example, I am saying that I have, let's say, on 24th April, I have purchased the shares of ICICI Bank for rupees 6,15,000 out of the sale proceeds of 9 lakh, which were sold on 31st December 2023 for rupees 10,50,000. So this first proviso will even be applicable on the reinvestment, students. So now when I calculate the capital gain on ICICI, I will again reconvert this 10,50,000 as on 31st December exchange rate which will be there. So 31st December exchange rate here it is given 41 and 43. So again what I will do is, so 41 plus 43 divided by 2 comes to 42. So 10,50,000 I will convert it into rupees into the INR. So if you see, I have made already the calculation over here. 10.5 lakh. So 41 plus 43 divided by 2 is 42. So 10.5 lakh divided by 42 is 25,000. I will convert the cost of acquisition, which is 6 lakh 15, which is on 24th April 2023. So 24th April 2023, the cost was 40 and 42 is the exchange rate. So basically, I will take 40 and 42, the average rate for that. This comes to 41. So 6 lakh 15 divided by 41, 15,000. So 10,000 is the gain. And again, I will reconvert on the date of transfer. The TTBSR on the date, TTBR on the date of transfer. And this will be my short-term capital. Are you getting this? Yes or no? Is this clear? Yes, students? So sorry, this should be, I think there's a mistake here. This should be 41. So here it will be 4.1. Are you getting about this? So it will be available on all the reinvestments that you are making out of the original asset that you have purchased. So just write it over here. First proviso to 48 is applicable even on the reinvestment. Okay?
मैम
Yes.
इनमें अगर इंडेक्सेशन का बेनिफिट लेना चाहे तो ले सकते हैं?
नहीं. So this is compulsory provision. You cannot take the indexation benefit, students. You have to go with this.
तो मैम ऑल केसेस में 10% एप्लीकेबल होगा टैक्स रेट?
Yes. Listed है तो 10, unlisted पे तो है ही नहीं. Fine.
Okay, yes ma'am.
Okay. Now the next provision with respect to the non-resident Indian. So as I told you, first proviso to 48 will even be applicable in that particular case. So there is a specific chapter which is available or which is exclusively for the non-resident Indians. Now what is that? Let us try and understand. So this is specifically applicable for the non-resident Indians only, the NRI, which is giving a special tax rate benefit to the non-resident Indian. So what is this chapter saying? This is applicable with respect to the capital gain arising on the transfer of shares. And this is chapter 12A of the income tax act. As I said, this is applicable to the non-resident Indian. Let me show you to the module. Here. Chapter 12B. Now, who is a non-resident Indian? An individual being a citizen of India or a PIO who is not a resident. A person is PIO if his parents or grandparents were born in undivided India. We had discussed in the residency provision what is the difference between the citizen and the PIO, right? We have already discussed that. So this is chapter 12A, applicable to NRI, which is basically PIO or Indian citizen who is a non-resident. Right? Now, what they are trying to say is that the tax rate which is provided under this particular chapter is on the 2 points. Number one, the investment income. The investment income will be taxed at the rate of 20%. Right? And then your long-term capital gain from the transfer of the specified asset transfer before 23rd July, 10%. Transfer after 23rd July, sorry, 12.5%. Now, what is this specified asset? So the specified asset here is shares in an Indian company, debentures issued by the Indian company, deposits in Indian company, central government security. So my specified assets are ICAI shares, debentures, bonds, and central government security. So this is only on specified asset, and this should be purchased through the foreign currency. This is purchased through the foreign currency. Are we clear? So in that particular case, you will get on the investment income, the tax rate will be 20%. And on the long-term capital gain, it will be 12.5% post 23rd July. Are we clear? This is a taxation on the gross basis, meaning here you will not get no Chapter 6A deduction and no indexation. Indexation anyways is not there after 23rd July, but this is before 23rd July. But you will get first proviso to section 48. Because under first proviso to 48, Indian company shares and debentures are covered if you purchase to foreign exchange. So that's what I had written. Applicable on the shares purchased by the non-resident Indian. Here it should be shares, not listed shares, it should be shares. So in that case, you will be getting the benefit of the first proviso to 48. Are we clear? Here also, you have a similar exemption as 54F. Under 54F, you have an exemption based on the formula. Here also, you have an exemption for long-term capital gain. So where an NRI is reinvesting the gains within a period of 6 months in the new asset, and in that particular case, he will get the exemption from the capital gain. So, if the NRI is utilizing the money of the sale consideration to purchase a new asset, then in that particular case, you will be getting the exception under 115F. And that can be any asset. There is no condition that it has to be the shares of Indian company. It can be any asset. Are you getting this particular point? So, if the investment made in any asset within 6 months of transfer, exemption under section 115. And what will be my exemption? Capital gain into, it's same as 54F only, into the cost of new asset divided by the net sale consideration. However, here you have a lock-in again of 3 years. So you cannot transfer the new asset for a period of 3 years. If the new asset is transferred within a period of 3 years, the capital gain which was exempted earlier shall now be deemed to be the income under the head capital gain, under the head long-term capital. Are we clear? So, if transferred within 3 years, long-term capital gain deemed income in the year of transfer. Are we clear? So let us look at one question with respect to this from the module. A non-resident Indian has acquired the shares in Indian company on 1/1/2009 for rupees 1 lakh in foreign currency. These shares are sold by him on 1/1/25 for rupees 3 lakh. He invests rupees 3 lakh in shares on 31st March 2025, and then these shares are immediately sold by him on 30th June. Discuss the tax implication. Here the question specifically tells you to ignore the effect of first proviso to 48. If the question does not give you this information, you will have to consider the impact of the first proviso to 48. Are we clear? So here the question is specifically telling you. So here first you will calculate the capital gain. So the sale consideration is basically 3 lakh. The cost of acquisition is 1 lakh. You will not apply any first proviso. So you will get a long-term capital gain of 2 lakh and you will get the exemption because you have invested the entire amount of 3 lakh. In the next question, if you see, if you now sell the capital asset, if you have sold the capital asset, the long-term capital gain of 2 lakh will become taxable in the previous year of 25-26 as a long-term capital gain. It will not be taxable as short-term capital gain. It will be taxable as long-term capital gain of 25-26 plus there will be a short-term capital gain of 50,000 which is arising because of 3 minus 3.5 lakh. Clear? In the next question, if you see, Mr. John, a non-resident Indian, purchased the unlisted shares of Indian company at a cost of 70 in 2010. He sold the shares for 2.5 lakh on 1/8/24 and the expenditure on transfer is 10,000. Compute the capital gain if he has deposited 1.5 lakh out of sale consideration. So he has not invested the entire sale consideration. So 2.5 lakh is the sale consideration. Out of that, 70,000 expense on transfer is 10,000. 70,000 is my cost. So my LTCG comes to 1.7 lakh. So 1.7 lakh into 1.5 lakh divided by the sale consideration, which is the net sale consideration and not the gross. So you have to reduce the expense on transfer, which will be 2.4 lakh. And your taxable long-term capital gain will be 1,06,000. Your exemption will be 1,06,250. And you will get the taxable long-term gain of 63,007. Are we clear? Here, the non-resident may not file the return of income if he has only income as the income, which is under the head, which is the investment income or the long-term capital gain, and the TDS has been duly deducted. And he can apply to be governed by this section even after becoming a resident in the subsequent year. And if he wants, he can opt out of this particular provision also. Are we clear? So just write down here. ROI not required if TDS deducted at rates under section 115. Under section 115. And you can write maybe 115E. Only income is investment income and LTCG. NR can be governed under chapter 12A even after becoming the resident. an option to opt out of Chapter 12A is available. So he has to furnish the declaration in the return of income itself that whether he wants to go with this chapter or whether he wants to opt out. And also one more thing, you will add here the surcharge and cess also. So these rates you will top up with plus surcharge plus cess. Clear? Shall we move on to the next section for the non-resident? Okay. So now section 115A, we have already done it from the module in itself. We have done yesterday section 115A. I have completed like with the specific incomes itself, right? Next is special provision for computing the tax on income from units purchased in foreign currency or capital gain arising from the transfer in the case of offshore fund. So see, there are these funds which are there, right? As I was talking to you about, like in the section 9A also, right? So these funds are basically these, big organizations are there which are incorporated outside India, but they have made some arrangement with the Indian financial institution or mutual fund to make the investments in India. So this provision is specifically targeting them and giving them a lower tax rate. So in case they are investing in the foreign exchange where the total income of the overseas financial organization, which is basically called as an offshore fund, is in respect of the units purchased in foreign exchange or the long-term capital gain arising on the transfer of units of mutual funds. So these offshore funds invest in the mutual funds basically. So that income on the investment will be taxable at the rate of 10%. Long-term capital gain, if it is before 23rd July, it will be 10%. And if it is after 23rd July, it will be at 12.5%. Here again, you will not get the benefit of the indexation or the Chapter 6A deduction. It's a very simple provision. Fine. And if it's a short-term capital gain, it will be taxable at 20%. If it is after 23rd July, if it is before 23rd July, it will be at 15%. Right? Now, coming to the 115AC. Now, this is again very important provision. So, here, this is the income arising or the capital gain arising on the global depository receipts. Any idea what are global depository receipts, student? You would have done in your financial management class. Yes. What is a global depository receipt? Any idea? See, if let's say for example, the Indian companies want to list overseas, they can list overseas not directly themselves. They can issue the global depository receipts and then they can get listed on the stock exchange outside India. So the shares are not listed on the stock exchange. Their global depository receipts are issued, which derive their value from the shares which are listed in India. Right? So this particular section 115AC, what it is trying to say is that in respect of the 115AC, the income that will be taxable, it will be taxable at the specific rates which are given. So what they have tried to say over here is that in the case of the global depository receipt, income by way of interest on the bonds of the Indian company or income by way of the dividends which are issued on the global depository receipts will be taxable at the rate of 10%. And income on the long-term capital gain will be also taxed at 10% if it is before 23rd July. And if it is after 23rd July, it will be at 12.5%. Here also, you will not get any deduction under Chapter 6. and you will not be able to get the first or the second proviso to section 48 benefit. Are we clear? So just, I will give you a small chart with respect to this. Just write down. Income from the global depository receipts. Right? Because here there is one more implication that we will have to consider. So I will be going back to again the capital gain. So long-term capital gain if these are transferred to a resident, then prior to 23rd July, this was 10%. Post 23rd July, this will be 12.5%. And here, remember, you will not get the deduction under Chapter 6A or the benefit of the first proviso or second proviso to Section 48. Fine. So, no Chapter 6A, no indexation, no first proviso. Right? Now, if this is transferred to a non-resident, this is exempt under Section 47. So under 47, where it is mentioned that transactions not regarded as transfer. So under that, there is a specific exemption, students, which is available in respect of the transfer of the GDR. And that's why I'm linking it over here. If you would have done it in isolated, like understanding over there, you would have not understood that. So under 47, I'll show you in the Act itself, any transfer of a capital asset being the global depository receipt is not considered as transfer under 47. So if you are transferring to a non-resident, which is made by a non-resident on a recognized stock exchange located in an IFSC, and where the consideration is consideration for such transaction is paid or payable in the foreign exchange. That is one. Any transfer of a capital asset being bonds or GDRs made outside India by one non-resident to another non-resident, that is also not regarded as transfer. So are you getting it? So if you are transferring to non-resident as well as transferring to resident, but transfer in the IFSC, then not transfer under Section 47. Are we getting it? Now, in respect of the short-term capital gain, again, if it is transferred to a non-resident, it will be exempt because it just says the transfer. It doesn't say transfer of a long-term capital asset or a short-term. If it is a GDR, long-term, short-term capital gain, both would be exempt under 47. And if the short-term capital gain arises on transfer to the resident, then this will be taxable at 15%. Sorry, not 15%, at the normal basis. Are we getting it? What is the period of holding for GDR? What will be my period of holding for GDR? Yes.
Yes, ma'am, 24 months.
Yes. So now that we have the maximum period of holding of 24 months only, earlier it used to be prior to 23rd July, it will be 36 months, but now it will be 24 months only. So the period of holding in the case of the GDR will be 24 months. Are we clear? So earlier it was 36 months. Now it will be 24 months. Clear? So just write down over here. Prior to 23rd July, 36 months. After 23rd July, clear? And therefore, now the balance which is there in this chart is the investment income that is there, which is dividend, that will be taxable at the rate of 10% on the gross basis. So just write down. Here also no chapter 6A deduction. Also here the TDS will be there under section 196C. So the TDS for this particular transaction is provided under 196C, which is TDS at the rate of 10% on the interest, dividend, and the SDCG. Right? So just write down 10%. Are we clear? So this is about the GDR. Also here they also have an exemption from filing the return of income. If the income is only dividend and the interest and the TDS has been duly deducted. So it shall not be necessary for a non-resident to furnish if the total income is consisting only of interest and dividend and the TDS has been duly deducted. Are we clear? So you can just write here exemption from ITR if interest or dividend income plus TDS deducted. Are we clear about this? Yes or no? The last one is with respect to the foreign portfolio investors. Now for them, we have a specific provision under 115AD. So 115AD is the section which is, we had spoken about what are the foreign portfolio investors, right? So under 115AD, there is the specific taxation under 115AD for the foreign portfolio investors. Now, what does it say? In respect of the income, in respect of the securities, other than the income on the units referred to in 115AB, which is the units of mutual fund. 20% in the case of FII, 10% if it's a specified fund. Short-term capital gains arising from the transfer of securities other than the 111A, it will be 30%. Short-term capital gains under 111A, which is basically the listed shares and the listed units, that will be 15% if it is before 23rd July, 20% if it is after 23rd July. Long-term capital gains other than 112A, it will be 10%. So this is not changed to 12.5% students. This is still 10%. Long-term capital gains under 112A, which is the listed one, on which STT is paid, exceeding 1.25 lakh, it will be 10% before 23rd July and 12.5% after 23rd July. And on the other income, it will be at the rate of the normal tax. So this is specifically about the FPI. Now for the FPI, there is also a surcharge provision which is applicable. So here, if the, for example, if the FPI has the total income more than 1 crore, but less than 2 crore, the surcharge will be 15%. But where the total income exceeds 2 crore, And even if the dividend and the LTCG, STCG is also exceeding 2 crores, so if the dividend is more than 2 crores, on that, still you will be having the maximum surcharge of 15%. So in this example, if you see the dividend income is 1.5 crore, capital gain is 1.5 crore, and other income is 2.1 crore. So on 1.5 crores and on the capital gain of 1.5 crore, the maximum surcharge which will be there will be 15%. And on the other income which is exceeding 2 crores, other than the capital gain and dividend, on that the surcharge will be 25% and 37%. So on the dividend and the capital gain, the surcharge is 15%. So you have to remember that particular point. Any questions, any doubts till now? Yes. And in respect of the FPI, I had told you that the TDS was under 194 LD earlier, and now on the securities you have the TDS under 196D in respect of securities. Are we clear? Yes, Aparna ma'am.
Hello, good evening, students. I am C. Aparna Chauhan, BS faculty, again joining you for this session. Actually, I do not want to interrupt in between, but just want to have an interaction with all of you. So, actually, some points are there in my mind, which I want to ask from you. That today, few more students were joined, but they left in between. Ankit, Kriti, some person has joined through Lenovo. May I know when is your attempt, Ankit? Or you can, just in front of your name, you can just write your attempt also. When is your attempt? When are you going to appear for the exams?
Ma'am, May 25.
May 25. Okay. What about Kirti? Somebody has joined through Lenovo also. Please just write down your names, students, so that we come to know.
May 25.
May 25. Okay, good. So actually, just want to ask you, now you are attending these classes. Any suggestion would you like to give us? How can we further improvise on? Any further suggestion? What else you want us, to add on in these classes so that we can make these classes more efficient, attractive? Anything? Yesterday also I asked the students who will be listening the recorded sessions, just fill up our feedback forms, and definitely we will be welcoming your suggestions for improvising these classes and all those things.
Ma'am, I'm not getting regularly Zoom link, and we organize some doubt solving session, ma'am, also.
अच्छा ओके आपको जूम लिंक नहीं मिल रहा है इस पे आपका हैव यू गॉन थ्रू आवर बीयूएस नॉलेज पोर्टल?
यस मैम.
हाँ तो जूम लिंक एक्चुअली हम देखोगे ना ये सेम ही है. अभी I will again discuss Zoom link again how we can provide you again we will talk on
Very
this
difficult to get it, ma'am. It is very difficult to get it. मुझे आज मतलब पूछ के लेना पड़ा है इनसे, और मतलब मैंने हर जगह ट्राई करा उसको, फिर वो मिलता नहीं है. फिर YouTube पे करते हैं, वहाँ पे मैम कभी रिप्लाई नहीं कर सकते हैं, वन वे कम्युनिकेशन होता है, तो फिर इजली इंटरेक्टिव क्लास नहीं होते मैम.
अच्छा ओके दैट विल अगेन आई विल से कि आपको जूम लिंक रेगुलरली शेड्यूल्स के साथ में अपलोड हो. मैं देख लेती हूँ. आई डोंट नो, मैं आपके साथ हम नेक्स्ट क्लास में इस पे फिर से अगेन वी विल टच अपॉन. और व्हाट एल्स आप कह रहे डाउट सेशंस स्पेसिफिकली वांट टू रिजॉल्व, बट आपकी फैकल्टी देखिए यहाँ पे अवेलेबल है, वो आपके डाउट्स के लिए भी है. आफ्टर दिस सेशन ऐसा करते हैं 15 मिनट्स हम सिर्फ डाउट सेशन के लिए रखते हैं. प्रेरणा, इज इट बी ओके?
Yes, ma'am. I've been clearing all the doubts as and when they raise it only in the chat box or on the link which is there. Yeah, but I always ask like before the session gets over, in case any student has doubt, we are always available to, clear your doubts.
Okay, okay.
One or two class more will add some amendment classes, ma'am. Also,
हाँ,
because it is
अमेंडमेंट के लिए ना, अमेंडमेंट के लिए मैं आपको बताऊं, हमने वी आर गोइंग टू कंडक्ट द वेबिनार क्लासेस.
okay.
वेबिनार हमने कंडक्ट करने हैं, मतलब होंगे अभी अभी आपका 1st और 2nd ऑफ दिस मार्च. 1st March, 2nd March, then your 3rd, 5th or 7th. These are the dates for the webinars where mainly our focusing will be on the amendment classes. ठीक है. और उसका वो आपको लाइव क्लासेस में ही ज्वाइन करिए, बिकॉज उसके लिए रिकॉर्डेड वर्जन्स नहीं होंगे. अभी मैंने देखा है कि बच्चे ना हमारे रिकॉर्डेड वर्जन्स पे ज्यादा हैं एज कम्पेयर टू द लाइव क्लासेस.
करेक्ट.
ठीक है. तो उनका आपको रिकॉर्डिंग भी नहीं मिलेगा अमेंडमेंट्स के लिए, तो आप वहां पे प्लीज ट्राई टू ज्वाइन, एंड दीज क्लासेस विल बी फ्रॉम 11 AM to 1 PM, right? 3 hours classes, 11, 12, 1 and 2 PM. So 3 hours class will be there, and वहां पे हमने स्पेसिफिकली फर्स्ट 2 क्लासेस, बिकॉज अभी आपने देखा कि यू आर गोइंग थ्रू द कैपिटल गेन्स में बहुत अमेंडमेंट्स हैं. ठीक. अमेंडमेंट्स भी इस तरीके से है कि इस बार के अमेंडमेंट्स आपने देखा होगा, दे आर डेट स्पेसिफिक, जहां
Yes.
पे आपको ना डेट्स आर रियली रियली वेरी इंपॉर्टेंट टू लर्न दोज डेट्स. ठीक है. तो
Yes.
और अमेंडमेंट्स के लिए आप सबने नया स्टडी मटेरियल तो लिया ही होगा. पता है कि आपको May 25 के लिए असेसमेंट ईयर 25-26 इज रिलेवेंट, राइट? AY
जी.
25-26, एम आई राइट? सो
जी.
उसके लिए आपका न्यू स्टडी मटेरियल ऑलरेडी बीन अवेलेबल. ठीक है. आपका नवंबर एडिशन था उसका, नवंबर 24. दैट एडिशन यू हैव टू रेफर. और इसमें अभी जैसे प्रेरणा मैम अभी आपको डिस्प्ले भी हो रखा है स्क्रीन पे, दिस इज द मॉड्यूल ऑफ आवर स्टडी मटेरियल, राइट? चैप्टर 21 है, जहां पे आप देखो कि जहां पे भी अमेंडमेंट्स हैं. फॉर एग्जाम्पल, कैन यू शो प्रेरणा द अमेंडमेंट पोर्शंस? वो हमने आपको ना बाय वे ऑफ बोल्ड एंड इटैलिक्स करके दिया है, to make you understand कि these are the amended portions. Can you just scroll down it a little bit, because we have already covered this 115 this thing na,
Sure, ma'am.
FIIs की amendments, STCG and LTCG की
Yeah.
dates and everything is given. वहां पे आपने देखोगा हमने italics and bold किया हुआ है to make it clear these are the amended portions basically. और further in the module 1, if you go through the module 1, there in the initial pages like that na, if you see here and on this on your screen, the long term capital gain on foreign exchange assets for transfer takes place before 23/7/24. the rate was 10% LTCG पे, है ना? now it is 12.5% on or after 23/7/24. ठीक है. अब इसमें क्या हुआ आपका, ये हमने इटैलिक्स में करके दिया, बोल्ड में करके दिया, ये क्लियरली बता रहे कि दीज आर द अमेंडेड पोर्शंस. इस तरीके से थिंग्स आर गिवन इन योर स्टडी मॉड्यूल्स. ठीक है.
Okay.
फर्दर वेबिनार्स वी विल बी कंडक्टिंग, ज्वाइन दोज वेबिनार्स. डाउट सेशन के लिए आपका जैसे एक सजेशन आया, बहुत वैलिड सजेशन है कि हम स्पेसिफिकली वी विल कीप सम टाइम फॉर क्लियरिंग द डाउट्स ऑफ योर्स. ऐसा कर लेते हैं. ठीक है.
Correct.
और एक माइंड में मेरे भी अभी जस्ट थॉट आ रहा था, क्यों ना हम इसको और इंटरेक्टिव बनाने के लिए हम लास्ट का 10 मिनट्स रखते हैं, जहां पे आप द स्टूडेंट्स हु आर ज्वाइनिंग अस ऑन लाइव प्लेटफॉर्म, वी विल गिव यू द अपॉर्चुनिटी टू conclude the session. Conclude means to just summarize the session what we have covered it. ठीक है. मेरा ये मानना है, मतलब I personally feel कि just पास करना CA is not the achieving our target. आपकी जो जर्नी स्टार्ट होती है ना सक्सेस की, एक्चुअल जर्नी स्टार्ट्स व्हेन यू क्लियर योर एग्जामिनेशन, जहां पे आप इंडस्ट्री में जाके फेस करते हैं. दैट इज अ ट्रू द फेस ऑफ द चार्टर्ड अकाउंटेंट्स बेसिकली, जहां पे आपका ना, मेरे को लगता है कि अलोंग विद योर एकेडमिक्स यू शुड ऑल्सो इम्प्रूवाइज ऑन योर कम्युनिकेशन स्किल्स, योर प्रेजेंटेशन स्किल्स, राइट? जहां पे आप अपनी बातों को रख सकते हैं, एंड दिस प्लेटफॉर्म रियली विल गिव यू दैट अपॉर्चुनिटी. क्यों प्रेरणा, is what are your views regarding it? Can we give
Yes,
this
absolutely,
opportunity to the
ma'am.
students, right?
Yeah,
Ankit,
absolutely.
Lenovo में the person who has joined through Lenovo, can you just rename your thing
Yes,
so
yes,
that we
yes.
can also
Sure.
announce your
Yes,
name?
yes. Sure, ma'am. Sure. Madhvendra, ma'am.
Magvendra.
Yes, ma'am.
Yeah. So are you fine with that? Would you like to conclude today's session? Kirti is there. Some few students also joined us. It's not compulsory कि आपको करना ही करना है. अगर जिसमें से भी जो रेज हैंड करेगा वही सिर्फ कंक्लूड करेगा. देखो ऐसा होता है, जब आप सेशन देते हो, ये कहीं ना आपका मेमोरी टेस्ट भी है. जब आपने सेशन सुना, आपको वो कितना रिटेन हो रहा है, कितना आपको अंडरस्टैंड हो रहा है। बहुत इन डेप्थ जाके नहीं करना, हम एक इनिशिएटिव लेते हैं, छोटा सा इनिशिएटिव है जिसमें क्या ना बच्चे आए यहाँ पे और आपको एक प्लेटफॉर्म मिल रहा है जब बोलने के लिए, जहाँ पे आपको कॉन्फिडेंस गेन होगा। ठीक है, क्योंकि मैंने देखा कि सीए बच्चे जो हैं यहाँ पे उनके साथ में ना प्रॉब्लम ये होती है, वो पास तो कर लेते हैं लेकिन जब उनको प्रेजेंटेशन की बात करते हैं तो वहां पे कहीं ना कहीं वो पीछे हैं। उस चीज को भी आपको इम्प्रोवाइज करेगा कहीं ना कहीं। और डेफिनेटली जब आप कंक्लूड करोगे तो पहले आपको माइंड में होगा कि हमने ये पढ़ा है, उसकी अंडरस्टैंडिंग भी कहीं ना कहीं बढ़ेगी और रिटेंशन भी इंक्लूड होगी आपकी, है ना। तो हम नेक्स्ट क्लास से ऐसे स्टार्ट करते हैं। तो जो भी बच्चे हमें रिकॉर्डेड में हमें सुनने जा रहे हैं, यूट्यूब के थ्रू हमारे को कनेक्ट में है, डेफिनेटली प्रेरणा फ्रॉम द नेक्स्ट क्लास ना, व्हाट वी कैन डू, जस्ट प्रोवाइड देम द दिस जूम लिंक, शेयर द जूम लिंक ऑन योर स्क्रीन, या फिर हम बैकग्राउंड में जूम लिंक हम स्क्रीन पर डाल देते हैं। ऐसा आई विल डिस्कस।
आज हमने वैसे ही किया था मैम, जूम लिंक का वो जो नंबर है ना वो स्क्रीन पे डाल दिया था स्टार्ट ऑफ द सेशन पे ही।
हाँ, या फिर हम उसको
Yeah.
एक रिबन के फॉर्म में चलवा देते हैं अगर बच्चों को प्रॉब्लम हो रही है ना, ऐसा कुछ वी
Right.
कैन डू लाइक दैट।
Right.
ठीक है, ये दैट वी विल डेफिनेटली डू। सो माघवेंद्र, आपका कितना प्रिपरेशन हो गया है, किस तरह का प्रिपरेशन आपका चल रहा है? वांट टू इंटरेक्ट विद द स्टूडेंट्स की क्या प्रॉब्लम आप फेस कर रहे हो स्पेसिफिकली इन द सब्जेक्ट डायरेक्ट टैक्स में, आपको क्या मतलब व्हाट चैलेंजेस आर यू फेसिंग?
मैम मुझे रिवीजन ही करने हैं और मतलब स्कोर अच्छा करना है मैम। 40 अराउंड स्कोर हो पाता है पेपर में, उसके ऊपर नहीं जा रहे हैं मैम।
अच्छा अच्छा। सो माघवेंद्र, आप कैसे पढ़ाई कर रहे हो? मतलब आप सॉल्व करते हो क्वेश्चंस के जस्ट रीड करते हो? हाउ यू डू योर स्टडीज?
मैम अमेंडमेंट्स करते हैं और उसके बाद कुछ क्वेश्चंस का रिवीजन कर लेते हैं मैम, क्वेश्चन सॉल्व करते
नहीं,
हैं
एक्चुअली ना,
मैम।
जब जैसे आपने क्लास, आप सेकंड ग्रुप अटेम्प्ट करोगे या बोथ ग्रुप्स? हाउ विल यू बी डूइंग?
मैम इस बार फर्स्ट दे रहे हैं, बट पहले से सेकंड ही दे रहे थे, तो सेकंड तो करेंगे ही मैम, क्योंकि
है
अब
ना
आईबीएस है ना, आईबीएस हो गया तो मुझे उसके लिए फर्स्ट भी पढ़ना पड़ रहा है, बिकॉज विदाउट फर्स्ट ग्रुप ये मैम पता नहीं क्या क्या इंस्टीट्यूट का इशू आया है ना, कि जो पेपर को हम क्लियर भी कर चुके हैं मैम फिर भी उसको पढ़ना है।
नहीं,
अभी अभी
देखो, आप ना एक चार्टर्ड अकाउंटेंट बनने वाले हो, इंस्टीट्यूट ने ना बच्चों के फेवर के लिए आईबीएस लेके आया है। आप जब सीए बन के जाते हो ना, तो आपको जो पढ़ा हुआ होता है डेफिनेटली एज ए प्रोफेशन आपको पता होना चाहिए। IBS is such a beautiful subject which is giving you the revising all the things which you have done। क्योंकि आप जब क्लाइंट के पास जाओगे तो आप ये नहीं कहोगे कि मैं तो सिर्फ डायरेक्ट टैक्स आता हूँ, कुछ यही बताऊंगा मैं आपको। वो अपने प्रॉब्लम्स लेके आएगा आपके पास में, आपको मिक्स्ड फैक्ट्स मिलेंगे हर चीज के। जहां पे आपको ऑडिट करने जाते हो फॉर एग्जाम्पल, तो आपको FRB आना चाहिए डेफिनेटली, आपको टैक्स के प्रोविजंस भी पता होना चाहिए, आपको कॉस्टिंग भी पता होना चाहिए। तो आपका ना इंटीग्रेशन जो है ना, बिजनेस सॉल्यूशन, बेसिकली वो बिजनेस सॉल्यूशन, इट इज सच अ ब्यूटीफुल सब्जेक्ट ऑफ द करिकुलम विच इज रियली नीड ऑफ द आवर। बहुत जरूरी था। आपको डेफिनेटली उन बच्चों को लगता होगा कि मैंने पुराना फर्स्ट ग्रुप पढ़ लिया, मैं आईबीएस क्यों करूं?
एमडीपी एफडीपी करवाते रहती है बीच बीच में, हम जाके एफडब्ल्यूआरपी भी अटेंड करके आए थे मैम जयपुर से।
ओके।
हम अगर हाँ, जो प्रेराइजिंग फॉर्म है ना मैम, उनको अगर स्पेसिफिक कुछ ऐसा कुछ चाहिए तो वो तो मतलब हम कर सकते हैं, लेकिन ठीक है, अब जो जो करिकुलम है हमको करना है।
नहीं, अच्छा करिकुलम है, डोंट थिंक अबाउट। देखो, हमें थोड़ा सा कहीं पे अगर आपको लग रहा है कि आप हमसे गाइड लीजिए, डेफिनेटली वी आर हियर टू हेल्प यू। किस तरीके से मैंने देखा है बच्चे में सबसे ज्यादा प्रॉब्लम क्या होती है आपके, में अटेम्प्ट है, पहले तो अपना स्टडी प्लान बनाओ बैठ के। ठीक है, कि आपके पास मेरे इतने सब्जेक्ट्स हैं, उसको मुझे कैसे कवर करना है। उस स्टडी प्लान के अकॉर्डिंग यू डू योर स्टडीज। और प्रेरणा मैम है आपके, जो भी टीचर्स आते हैं आप उनसे भी ये सारी बातें कर सकते हो। देखो, शी इज ऑल्सो, इफ शी इज टीचिंग यू समथिंग, तो शी कैन गाइड यू ऑल्सो हाउ टू डू योर प्रिपरेशंस। आप उनसे पूछ सकते हो, है ना, जो भी फैकल्टी आ रही है। दे आर द चार्टर्ड अकाउंटेंट्स, आप इन क्लियर हैं, प्रोफेशंस हैं, राइट, दे हैव, उन्हें पता है कि किस तरीके से पढ़ाई करनी चाहिए, तो आप उनसे भी क्वेश्चंस पुट अप कर सकते हो। अदर देन दिस स्टडीज, देखो हम एकेडमिक्स है ना पढ़ रहे हैं, पढ़ने के साथ में हमें किस तरीके से अपने सब्जेक्ट को स्ट्रेटेजीज बनानी, किस तरीके से हमें पढ़ाई करनी चाहिए, उसके क्वेश्चंस डेफिनेटली यू शुड आस्क इट टू द LBC फैकल्टी ऑल्सो। Simultaneously the BOS faculty will be joining you to guide you during the classes also. At the end of the session, one of the team members would be there, who will be guiding you, who will assisting you, who will be asking you what more suggestions, asking you for the suggestion to improve these classes more and more, right? तो अभी मेरे को यही था, जैसे मेरा माइंड में आया कि हम कंक्लूड करने का अपॉर्चुनिटी हम बच्चों को देंगे, जो भी यहाँ पे हमारे प्लेटफॉर्म पे आएगा वो 10 मिनट्स का टाइम हम उसको देंगे, वो समराइज करेगा। दिस इज वन ऑफ द पार्ट। सेकेंड ये था कि जो आपने सेशन करा उसके हम कुछ स्मॉल स्मॉल क्वेश्चंस आपको पुटअप करेंगे और आपको उनके आंसर्स देने हैं। आज भी
Okay.
मेरे पास प्रिपेयर थे, बट हमारा अभी टाइम इतना हो गया है, इट्स अराउंड 9:16 वी आर एट एक्चुअली। तो नेक्स्ट क्लास से हम ट्राई करेंगे 10 मिनट्स का टाइम हम निकाले, 10 to 15 मिनट्स का, जिसमें हम आपको कुछ रेगुलर एमसीक्यूज, नॉट वेरी एप्लीकेशन। आपने देखो पेपर इज योर वेरी एप्लीकेशन ओरिएंटेड पेपर, काफी एप्लीकेशन ओरिएंटेड पेपर आता है, बहुत इंटीग्रेशन ऑफ प्रोविजंस इज रिक्वायर्ड, द अंडरस्टैंडिंग ऑफ द प्रोविजन इज वेरी मच रिक्वायर्ड, एंड प्रेजेंटेशन ऑफ द क्वेश्चंस
मैम
बहुत ज्यादा इम्पैक्ट करती है आपके एग्जामिनेशन में। तो हम ना, जो आपको नॉलेज बेस्ड क्वेश्चंस हम यहाँ पे अगर लेंगे भी ना, वो आपके एग्जाम में एज इट इज नहीं आएंगे, लेकिन आपको कुछ चीजें होती है जो आपको रिटेन करनी पड़ती है, मेमोराइज करनी पड़ती है, उस चीज को हेल्प करेंगे दोस क्वेश्चंस। डोंट एक्सपेक्ट कि उसी टाइप के क्वेश्चंस आपके एग्जाम में आएंगे। एग्जाम में तो आपने देखा होगा किस टाइप का आपका ऑलरेडी टेस्ट नॉलेज में क्वेश्चंस दिए हुए हैं, आपकी एमटीपी में है, योर सजेस्टेड आंसर्स जो लास्ट ईयर्स के हैं वो भी आप रेफर कर सकते हो, बट डेफिनेटली यू हैव टू कीप इन माइंड द अमेंडमेंट्स। बेसिकली अमेंडमेंट्स डायरेक्ट टैक्स में बहुत बहुत बड़ा रोल प्ले करते हैं, ठीक है? तो
मैम
उसके लिए
since direct test law is ma'am law paper and it requires a lot of interpretation, so bilingual if possible ma'am little bit कुछ bilingual interpretation भी हो जाए कि मतलब मैम इंग्लिश के साथ
नहीं
हम
नहीं, बाइलिंगुअल अगर आपको लगता है कि हिंदी में भी फैकल्टी को थोड़ा एक्सप्लेन करना चाहिए, आप प्लीज बोलिए,
ठीक मैम
फैकल्टी ट्राई करेगी। देखो वी आर टैकलिंग द स्टूडेंट्स नेशन वाइड, ठीक है? तो
ओके
हमें ओवरऑल नेशन वाइड हमें देखना पड़ता है कि बच्चों को कैसे, सभी बच्चों को टैकल किया जाए विद द कम्युनिकेशंस, ठीक है? तो अगर आपको लगता है कि कुछ चीज समझ में नहीं आ रही है तो प्लीज आस्क देन इन देयर, आपको फैकल्टी एक्सप्लेन करेगी उनको, उसको शी विल ट्राई टू एक्सप्लेन द थिंग्स इन हिंदी ऑल्सो। सो डोंट हेजिटेट टू आस्क द क्वेश्चंस। आप हिंदी में क्वेश्चंस पूछना आप चाहते हैं, प्लीज आस्क योर क्वेश्चन इन हिंदी, आप हिंदी में पूछिए। अगर आपको लग रहा है कि ये वाला कंसेप्ट मुझे इंग्लिश में नहीं समझ में आया, मैम कैन यू एक्सप्लेन इन हिंदी एज वेल, तो आपको फैकल्टी विल एक्सप्लेन इन हिंदी ऑल्सो, ठीक है? सो डोंट वरी अबाउट इट। somebody has joined through Oppo, so may I know your name? Please write your name so that you know we can recognize your name also ना। आपका अटेम्प्ट लिखिए, आपका नेम लिखिए, ठीक है? तो मेरा कहने का मतलब था, आज तो हमारा बहुत टाइम हो गया, हम नेक्स्ट क्लास से ऐसे प्लान करते हैं, है ना? अभी हम सेशन क्लोज कर लेते हैं। आपके जो भी डाउट्स हो, अभी तक आपने जो भी पढ़ा हो, ठीक है, इससे जो रिलेटेड आपके इलस्ट्रेशंस बुक में दिए हैं और वो करके आइए खुद से। ऐसा नहीं करना, रीड मत करना। बच्चों के साथ प्रॉब्लम क्या होती है ना, दे स्टार्ट रीडिंग द इलस्ट्रेशंस एंड साइमल्टेनियसली देयर सॉल्यूशंस। तो जब आप एग्जाम में, जब व्हेन यू आर गोइंग इन द एग्जाम्स एंड फेस द ट्राई राइटिंग और आंसर शीट्स, तो वहां पे बच्चे वहां पे बहुत लैक करते हैं, प्रॉब्लम हो जाती है, वो लिख ही नहीं पाते हैं, फिर टाइम मैनेजमेंट नहीं कर पाते प्रॉपरली। तो वो टाइम मैनेजमेंट इंप्रूव करने के लिए, प्लस आपका कितना होल्ड है, आपकी लेवल ऑफ अंडरस्टैंडिंग क्या है, वो तभी क्लियर होगी, तभी बच्चों आपको कॉन्फिडेंस आएगा जब उन क्वेश्चंस को आप सॉल्व करोगे बाय टेकिंग पेपर एंड पेन, ठीक है? फाइनल के स्टूडेंट है, इसका मतलब ये नहीं होता कि अब तो हमें सब आता है, हमें पेन पेपर की जरूरत नहीं है, अब तो हम जाके लिख लेंगे पेपर में, लेकिन ऐसा नहीं हो पाता। फ्रैंकली स्पीकिंग, जब आपको बोलते हैं कि इसको राइट करना शुरू करो, तो वहां पे आप कुछ ना कुछ चीजें होती है, लिखते समय आप भूल जाओगे, तो वो चीजों को आपको ओवरकम करना है, उसके लिए आप ना लिख के प्रैक्टिस करिए, ठीक है? पहले तो आप अपने नोट्स बनाइए। मैम आपको नोट्स देख रही हैं, ठीक है, इट्स फाइन, आपके यहाँ के जो नोट्स बन रहे हैं वो भी ठीक है। आप बुक लेके अपने खुद के नोट्स बनाइए, और रियली आई वांट टू नो फ्रॉम यू पीपल हाउ मेनी हैव डन prepared their own notes for this chapter. NR taxation के I think today is the third class. Prerna, am I right?
Fourth, last
Fourth
one.
class. Fourth class. Okay. So आपके 4 क्लासेस हो गई, अभी तक कितने बच्चों ने कोशिश किया खुद से नोट्स बनाने की? आप प्लीज नोट्स बनाइए, खुद से बनाइए। उसके बाद जो क्वेश्चंस दिए हो, आप जब नोट्स बनाते हो ना, तो आप उस प्रोविजन को बहुत अच्छे से समझते हो। एक तो आपकी राइटिंग स्किल्स इंप्रूव होती हैं, ठीक है, प्लस कंसेप्चुअल अंडरस्टैंडिंग बढ़ती है, मेमोराइजेशन उसका इंप्रूव होता है, आप उसको बहुत देर तक रिटेन कर पाते हो इजीली। तो आप नोट्स ट्राई करिए बनाने का, और ट्राई टू ज्वाइन मोर एंड मोर अपने पीयर ग्रुप में। आप जहां पे भी आपका पीयर ग्रुप है, सर्कुलेट दीज एलवीसी क्लासेस के बारे में आप बताइए बच्चों को, सो दैट दे कैन ऑल्सो कम एंड ज्वाइन अस। ठीक है, जितने ज्यादा बच्चे होंगे इंटरेक्टिव होगा, हमें भी पता चलेगा कि आपको किस टाइप के चैलेंजेस आपको फेस कर रहे हो आप एग्जाम में प्रिपरेशन के लिए, इस पेपर में, इस पर्टिकुलर सब्जेक्ट में व्हाट मोर असिस्टेंस यू आर रिक्वायर्ड फ्रॉम द बोर्ड ऑफ स्टडीज। ठीक है, this is what I would like to say you, and definitely I will be eager to know from you and will be looking at you कि आप में से कौन आएगा जो इस सेशन को समराइज करेगा। अभी हम एनीबडी हु वांट्स टू समराइज टुडे सेशन, हम जस्ट 5 मिनट्स का टाइम देंगे। माधवेंद्र, अंकित, कीर्ति, ओप्पो से somebody has joined. Somebody wants to conclude or summarize the session, or we should conclude it?
मैम कल स्टार्टिंग में कर लेंगे।
कल स्टार्टिंग में करेंगे
मैम
Okay.
कल क्या क्या टॉपिक कवर करेंगे मैम हम लोग?
अभी आज क्या क्या कवर किया आप पहले मुझे बताइए। आज हमने क्या क्या टॉपिक कवर किए थे?
मैम हमने प्रिजम्पटिव टैक्सेशन करा है, ऑन शिपिंग बिजनेस का करा है, एयरलाइन एयरक्राफ्ट बिजनेस वालों का करा है, एंड उसके बाद मैम हमने कैपिटल गेन्स करे हैं। कैपिटल गेन्स के बाद मैम हमने इस जीडीआर पे जो कैपिटल गेन होता है उसकी टैक्सेशन पढ़ी है। बस मैम।
वेरी गुड, वेरी गुड, वेरी गुड, वेरी गुड, दैट्स गुड। सो आपको ये तो पता है आपने क्या क्या पढ़ा है। अब आपने जो भी प्रिजम्पटिव टैक्सेशन का, प्रिजम्पटिव टैक्सेशन एक छोटा सा टिप दूंगी बस मैं यहाँ पे, जो बच्चे मिस्टेक करते हैं एक्चुअली प्रिजम्पटिव में, वो बच्चों को माइंड में क्या रहता है, जो 5% का रेट दिया या 7.5% का रेट दिया उसी को टैक्स समझ लेते हैं। ये मिस्टेक नहीं करनी है, दैट इज नॉट द टैक्स अमाउंट, राइट? वो आपका इनकम है, बिजनेस इनकम है, उसके ऊपर अगेन आपको जो भी अप्लीकेबल रेट ऑफ टैक्स है वो अप्लाई करना है। ठीक है, हाँ बच्चों ने बहुत मेरे पास ऐसी वाली मतलब मैंने देखा ऑब्जर्वेशंस आती हैं एग्जामिनर्स की भी।
44 एडीए में ऐसे होते हैं।
नहीं 44 एडीए में कहाँ होता है ऐसे?
नहीं मैम 50% होता है ना, 50%
मैम उसमें भी इनकम मानी जाती है ना 50%।
हाँ 50% भी वो इनकम ही होती है बेटा।
हाँ जी मैम 40 एडी जो मैम वहाँ पे ना 8%
6% और 8% का केस होता है,
जी
राइट? वहां पे भी आप देखोगे वहां पे क्या होता है, वो आपकी टैक्स लायबिलिटी नहीं होती है,
इनकम,
वो प्रिजम्पटिव इनकम होती है ना? प्रिजम्पटिव इनकम होती है, फिर वो टैक्स रेट तो डिपेंडिंग ऑन द पर्सन की, अगर डिफॉल्ट टैक्स रिजाइम में पर्सन इज एलिजिबल टू क्लेम द डिफॉल्ट टैक्स रिजाइम तो डिफॉल्ट टैक्स में जाएगा, अगर वो नॉर्मल प्रोविजंस के बेसिस पे है तो वो नॉर्मल प्रोविजंस में जाएगा। समझ गए? ये मिस्टेक बच्चे करते हैं, इस टाइप के ना एमसीक्यू आ जाते हैं। फॉर एग्जाम्पल एक एमसीक्यू आ गया प्रिजम्पटिव टैक्सेशन का, उसमें उन्होंने क्वेश्चन में पूछे कि व्हाट वुड बी द टैक्स लायबिलिटी, तो बच्चे जल्दी जल्दी में क्या करेंगे ना, प्रिजम्पटिव इनकम निकालेंगे 5% के रेट से, उसके बाद उसी पर टिक करके आ जाएंगे। इवन डिस्क्रिप्टिव क्वेश्चंस में ऑल्सो दे डू लाइक दिस। सो इस तरीके मिस्टेक्स नहीं करनी है, अंडरस्टैंड? ये बहुत छोटे छोटे टिप्स हैं जो कि आप जब करोगे ना, जब अपने खुद के नोट्स बनाना शुरू करोगे आप, तभी आपको रियलाइज होगी ये वाली चीजें और वो माइंड में भी रहेंगी।
Actually, ma'am is saying right. देखिए, like when I was preparing for all the subjects in my CA final, so what I used to do is like this point which she is raising कि आपको conclude करना है session। अब इससे क्या होगा कि जब मैं पढ़ाई करती थी, so at that point मैंने जितना भी इस सब्जेक्ट का आज के पूरे दिन में पढ़ा, वो एक बार उसका क्विक रिकैप मैं मुंह से बोल के रिवाइज कर लेती थी कि आज के दिन में मैंने ये 10 पॉइंट्स इसमें से पढ़े। अब जैसे मैं अगर लेट्स से फॉर एग्जांपल आपके साथ कर रही हूँ, 44 एडी नहीं 44 बी हमने किया, उसमें हमने 7.5% किया, 7.5% अमाउंट रिसीव पे था, अमाउंट पेबल पे था, तो देखिए हम क्विकली रिवाइज कर पा रहे। फिर हमने 44 डबल बी ए किया, वो एयरलाइन के लिए था, उसका 5% है। तो अब मेरे दिमाग में क्या चल रहा है, जो मैंने चार्ट ऑलरेडी लिखी हुई है, जो अब मेरे स्क्रीन के सामने भी नहीं है, वो मेरे दिमाग में चार्ट खुद से फॉर्म हो रही है और मैं उसे रिवाइज कर रही हूँ। तो मैं एग्जाम के दिन भी जब मैं लिखने बैठूंगी, आपके दिमाग में कहीं ना कहीं वो चार्ट घूमती रहेगी, तो आप मिस्टेक नहीं करोगे। दूसरी चीज, आप जब सम सॉल्व कर रहे हो, मैं क्या करती थी कि जब सम कहां पर भी मैं बुक बंद करके सॉल्व करूंगी, वही सम को 3 बार सॉल्व करूंगी। अब उस सम में अगर मैंने कुछ मिस्टेक कर ली, उसे बड़े रेड बोल्ड वर्ड्स में रेड पेन के साथ लिखती थी कि ये मिस्टेक मुझे दोबारा रिपीट नहीं करना है। अब जब आप एग्जाम में वैसा सिमिलर टाइप का क्वेश्चन देखेंगे तो आपको वो रेड पेन में हाईलाइटेड आपके बुक का एक इमेज, क्योंकि हमारा दिमाग इमेजेस अच्छे से कैप्चर करता है, इसीलिए मैं आपको चार्ट फॉर्म में दे रही हूँ। बट आपको ये सिर्फ देखना नहीं है, ये चार्ट आपकी खुद के बुक में भी बनानी है। और आप जो मिस्टेक्स कर रहे हो वो उस चार्ट के सामने लिख दीजिए, अपने नोट्स बनाइए, आप सम्स लिखिए, आपको कहाँ से कहाँ सॉल्व क्या करना है, क्या रिपीट करना है लास्ट डे पे। तो आज से अगर आप प्रिपरेशन करोगे, ऐसा नहीं है कि आप जिस दिन एग्जाम दे रहे हो डीटी का आप पूरा ये सब फिर से पढ़ पाओगे वो एक
Yes.
दिन में, वो नहीं हो पाएगा। तो आप आज से अगर रिवीजन मटेरियल अपना खुद का बनाना स्टार्ट करोगे, वो दिन आप सिर्फ वो पढ़ के जाओगे तो भी मोर देन इनफ है। क्योंकि कुछ लोग बोलते हैं हमारा पढ़ाई खत्म नहीं हो रहा है, पढ़ाई खत्म नहीं होगा बिकॉज यू आर ट्राइंग टू रीड एवरीथिंग। इट कांट बी पॉसिबल। जो सब्जेक्ट आप पिछले 6 महीने से कर रहे हो, आप उसको एक दिन में कैसे क्लोज कर सकते हो? ह्यूमनली पॉसिबल नहीं है। तो इसीलिए आप नोट्स बनाओ, रिवाइज करो, बुक बंद करके एक ही सम को 10 बारी प्रैक्टिस करो, जब तक वो परफेक्शन के साथ आ नहीं जाते, आप समझ नहीं लेते हो कि ये सम में मैं क्यों रॉन्ग कर रहा हूं। तो उस चीज से आपको वो डायरेक्शन मिलेगा। और हर एक लॉ, डीटी हो गया, आपका कॉर्पोरेट लॉ हो गया, इनडायरेक्ट टैक्स हो गया, हर एक चीज लॉजिक पे बेस्ड है। हाँ, कुछ चीजें जैसे अभी 7.55% ये हमें मेमोराइज करना है। जो चीजें मेमोराइज करनी है उसकी एक अलग से लिस्ट बना लो, सेक्शन नंबर की एक अलग से लिस्ट बना लो। सुबह सबसे पहले उठने से पहले या रात को सोने से पहले वो 4 सेक्शंस डेली डेली करके याद करते जाओ। तो उस तरीके से आपको एक आपका एफर्ट वो राइट डायरेक्शन में जाएगा।
हाँ, ये इस तरीके से टिप्स ना आप इनको दीजिए बच्चों को, प्रेरणा। एंड शी इज रियली सेइंग एब्सोल्युटली राइट कि हमारे पास जब इस तरीके से हम प्रैक्टिस करते हैं, अपने खुद के नोट्स बनाते हैं ना, और आपने जैसे बोला उन्होंने रिकैप किया, देखो प्रेरणा मैम ने अभी आपके सामने किस तरीके से रिकैप किया, उन्होंने सेक्शन के साथ में, उसके प्रोविजन के साथ में, उसके रेट्स को भी रिकैप किया साथ में। तो ये कहीं ना कहीं यहाँ पर रिविजन भी साथ साथ होता जा रहा है। तो ऐसी स्ट्रैटेजीज प्रेरणा, आप डेली जब भी क्लासरूम में एक टिप जरूर बच्चों को दो इस तरीके की, ठीक है? एक कॉमन मिस्टेक भी बताओ उनको कि मतलब आज ये हमने पढ़ा, उसमें वो क्या मिस्टेक्स करने की चांसेस ज्यादा रहते हैं प्रोविजन के साथ साथ, वो आप इस तरीके के टिप्स बच्चों को दीजिए। और मैं भी डेफिनेटली आई विल ट्राई टू ज्वाइन, हम ज्वाइन करेंगे। और मैं आप लोगों से सुनना चाहती हूँ, आप कम फॉरवर्ड एंड ट्राई टू रिकैप दिस सेशंस, ठीक है? हम डेली एक ना एक बच्चों को इसकी अपॉर्चुनिटी देंगे। अभी अंकित बोल रहे कि हम नेक्स्ट क्लास में करेंगे इनिशिएट, जब हमारा सेशन शुरू होगा, ठीक है अंकित? यू प्लीज बी रेडी फॉर विद द रिकैप, ठीक है? हमने जो लास्ट क्लास में पढ़ा उसको आपको एक बार समराइज करना है, ओके? और भी बच्चे जो भी रिकॉर्डेड देखेंगे, मैं नेक्स्ट टाइम से आई फील कि बच्चे मोर एंड मोर स्टूडेंट शुड ज्वाइन अस लाइव, है ना, सो दैट वी कैन मेक दिस सेशन मोर इंटरेक्टिव। और इसका वेब लिंक के लिए आई विल ट्राई टू रन अ रिबन, जिससे आपको इसका जूम लिंक बच्चों को रेगुलरली उस पे स्क्रीन पे चलता रहे, सो दैट सम मोर फ्यू स्टूडेंट्स विल ज्वाइन। Thanks for your such wonderful suggestions. Basically I am to looking for these kind of suggestions from you and want to know from you कि किस तरीके से और इसको हम improve करें, ठीक है? तो आपकी strategies में डेली बेसिस पे you will be going to get some more strategies कि किस तरीके से इस पेपर को और स्ट्रांगली प्रिपेयर किया जाए, ओके? I think now we can close this today's session. It's already we are reaching beyond time, 9:30 we are at. So we can conclude.
One last question from Prerna ma'am.
Yeah.
What is the difference between NRE and NRO account?
Yeah. See, NRE and NRO क्या रहता है, ये FEMA के अंदर आ जाता है। NRE अकाउंट जो रहता है, बेसिकली इफ यू वांट टू रेमिट द फंड्स इन इंडिया तो यू यूज NRE अकाउंट। बेसिकली फॉरेन एक्सचेंज में जब इंडिया में फंड्स आते हैं। NRO जो होता है, जब आप इंडिया में जो इनकम अर्न कर रहे हो, आपका जो नॉर्मल सेविंग बैंक अकाउंट है वो NRO में क्रेडिट होता है। तो NRO इज फॉर इंडियन इनकम, NRE इज फॉर टू ब्रिंग द मनी इन इंडिया।
Okay.
Good night, everyone, and we can conclude our session. We will be meeting you next session with some more students on live platform, and come with your suggestions. Again, I am saying you come with your suggestions, and definitely come with your more and more doubts. We are giving this opportunity. You come here, ask more and more doubts to the faculty, whoever is there. ठीक है? So technical team, we can close. Prerna, we can close the session. Yeah.
Thank you so
Good
much.
night, everybody, everyone, and thank you so much.
Good night, ma'am.
Good
Good
night.
night.